Welcome back to the European market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London. Tom McKenzie is with me.
And here are your top stories. A moment of truth for China Evergrande. A dollar bond coupon comes due today. Shares surge along with other Chinese developers as sentiment turns positive. Powell's tapering timeline. The Fed chair says they could start scaling back asset purchases in November. The Treasury curve flattens and global stocks rally. And the Bank of England's policy puzzle will get decisions from the BOE as well as other central banks in Norway, Turkey, South Africa and more.
I know it's like a central bank bonanza. Now, if you look at the stocks, so for the moment, look, they're kind of deciding. First of all, they're interpreting what's happening with the Fed, but really, they're also kind of deciding what to do with Evergrande. We could have news on that any minute, and then we, of course, look at all that central bank action. A bit of support out there when it comes to futures getting some 0.8%. Tom, you have the open.
Yes, indeed, Francine. So, of course, digesting that time frame then from Jay Powell, you are going to get, very likely, he said, tapering in November. The dot plot's pulling forward into 2022, but there was no consensus about whether or not you will indeed get a rate hike next year. That seems to be something that the bulls out there are hanging their hats on, at least so far. The Fed funds rate's pointing to potentially 2 hikes in 2023, less than 1 in 2022. You've got the talk, you've got the tapering timeline from the FOMC and the Fed, you've got the BOE coming up, but the policy action is coming from the People's Bank of China with an additional $17 billion in liquidity pumped into the system today by China's central bank, calming pain relief for the markets in Asia. In terms of how things are opening, the futures are pointing very positive. This is being reflected now, a third straight day of gains. Of course, if we close in the green later today, the Spanish IBEX gaining 0.9%. Over in France, you've got the CAC 40 up 0.8%. We're hearing that the President Macron will be meeting with the US President Joe Biden at some point to discuss that controversy around submarines. The FTSE 100 is gaining 0.5%. Of course, looking ahead to the BOE and Andrew Bailey's conundrum when it comes to slowing growth and higher inflation. Over in Italy, gains of 0.7%. Let's switch it on and look at the sectors then, because it was basic resources and it was financials that were gaining yesterday. Today, energy gaining 0.8%. Goldman Sachs saying you could be looking at $90 a barrel if we get a particularly cold winter. That is from Jeff Curry at Goldman. In terms of the banks, you're seeing gains there of more than 1%. So that sector building on the gains that we saw yesterday. The auto sector is gaining 0.7%. Let's move it on to the map and see how things are playing out on the regional basis. You have Eurozone PMI data out, by the way. The crucial ones are 8.15 and then 8.30 to kind of build out the economic picture in this part of the world. Worth noting that Japan was closed today. There was some optimism over in China around Evergrande, but also that injection of liquidity by the PBOC. This is how it's looking. Green on the screen across the map here in Europe in the very first early stages of the open. Fran.
Tom, it's looking good. European equity markets, so as Tom was saying, opening in the green. Traders mulling the prospect of a reduction in Fed stimulus as early as November. And of course, some of these debt concerns over Evergrande. Now, we heard from central bankers and business leaders on the subject.
The Evergrande situation, it seems very particular to China. There's not a lot of direct United States exposure. The big Chinese banks are not tremendously exposed.
While we must monitor carefully for a spillover effect on financial markets globally, at this point, I don't see this developing into a global crisis.
There is a potential for second and third order impact, particularly on the capital markets. and the bond markets. And we've got to stay close to that.
They own everything. They own the land. They own the companies, the banks. They control the news. So I don't see this kind of loss of trust that actually brought Lehman and the whole system down.
Well, joining us to talk about the markets, Hannah Gooch-Peters, a global equity investment analyst at Sanlam UK. Hannah, thank you for joining us. We want to talk about the Fed. We want to talk about all of the central bank action. But first, what's the read across on Evergrande? Even if it's not Lehman, how much can it hurt stocks in Europe and elsewhere if it defaults?
Good morning, Francine. No, look, I think that the contagion risk could actually be quite large, and we've seen that ripple effect already across global markets. And we can see today the good news on Evergrande actually is having an impact already. And so what we saw earlier this week is we saw the dramatic sell-off on the bad news, and then we see on better news, we start to see that things like iron ore prices and then your materials sector having come off quite strongly originally have rebounded. It leaks into the financials, European banks that have exposure there. And of course, you've got the wider ongoing news from China that is coming out about the changes in regulations and everything from your big tech companies and your Alibabas and your Tencents right through to this wealth equalization, if you like, that's going on, that's affecting your luxury goods sectors. So I think that the spread here, the contagion effect, could actually be quite large.
Okay, Hannah, you're increasing, though, your exposure to some Asian equities. What are you looking at in particular? Where are the opportunities?
Yeah, so for us, what we have to do is we look through the short term, the news flow that's depressing these share prices. It all started, like I said, last year with the failure of the news round, the Ant Financial IPO. We've had read across through the gaming news on the likes of NetEase and Tencent, and a real crackdown on those things. And so the share prices have become demonstrably lower. But we look at the fundamentals of these companies. These have exceptional balance sheet strength. They're very, very good quality characteristics. And so while parts of the market, various investors with perhaps shorter term time horizons are currently calling these things uninvestable, what we've got to do is look out over a longer term time horizon, look at those fundamentals, which are very much intact, those structural long-term growth stories and the likes of online gaming, consumer spending. And we can see an opportunity to enter these companies at valuations that look the most attractive than they have done in the past, say, 5 years.
We had this pretty amazing story, Hannah, looking at traders spending $50 million on options, betting that the S&P 500 will continue to rally. Is there anything in Europe that actually looks particularly attractive right now? So we have the German election on Sunday. Tom and I know, we talked about it extensively. We have quite a lot of things going on when it comes to, Italy, France, and compared to the UK. Where do you find the best value in Europe right now?
So I think European pharmaceuticals are still looking quite attractive on a valuation basis. We've seen some weakness of recent on the back of Biden making noises about drug prices in the US. Companies like Roche and Novartis have pared back a little bit on the back of that. And so we could start to see some opportunity there. And I think also in your consumer staples have really lagged the wider market. One sector that's actually really been left behind so far since the big global rebound after the pandemic. Areas such as energy and financials have really had a big bounce on the back of reopening economies, and particularly it's flown through into this year off the back of November last year. And so even though they're coming off a very low base, I think there may not be much more further to go for those from there.
Hannah, anything you heard from Jay Powell yesterday that changes your views on US equities? We are going to get less support from the Fed going forward.
Yeah, I mean, ultimately, he also said that they were going to do what they could to support the US economy and reopening. And what we have to think about is that while this is still ongoing, this equity markets could continue to rally, and with that support still staying. And I think what they really kind of said is they talked about tapering, but they're talking about tapering, if you like. So it's really not as extreme as some might have thought. And I think what we really have to try and prepare ourselves for is, as valuations increase, then return expectations might perhaps be muted going forward. And the US has had exceptionally strong runs since last year. And the question is, where to from here?
Hannah, Great insights, more muted returns, possibly something to bear in mind for investors out there in the US equity space, at least. Hannah Gooch-Peters, Global Equity Investment Analyst at Sanlam UK. Okay, coming up, the global chip shortage worsens for automakers with an estimated $210 billion hit to revenues this year. We assess the damage from the crisis next. This is Bloomberg.
China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. 10 minutes into the European trading day, and optimism taking hold here in Europe. Gains of 0.7% across the European stocks 600. Fran.
Now, this is what's moving in the market. So we have a couple of stocks that are moving more than others. We start with Forex. Now, this is an auto parts maker in France. This was one of the main stories also that Tom pointed to this morning when we had our editorial meeting, and it's chip shortages. Instead of getting better, they're getting worse. Forex actually reducing their projected revenue and profitability for the year. Again, this is after they slashed vehicle production forecast as the chip shortage continues to roil the industry, and it's just getting worse.
Yeah, we're far from the end when it comes to this story and the impact on those automakers, and that's being felt here in this supplier. In terms of what's happening with elevators, you've got elevator or lift, there is a space here, there's a play here by Otis World, which is a US company, elevator manufacturer, but it's bidding to delist its Spanish unit Zardoya with an offer of as much as close to $2 billion US, in fact, and the offer is about 30% up on the closing price yesterday. So you're seeing some gains there of 32% for that Spanish-listed company.
I mean, we have three stocks, and I think they're all up today, actually. So happy Thursday, everyone. We're looking at stocks
bringing the optimism
that are moving. Okay, Royal Mail, not a huge mover, but it's still gaining some 1%, maintaining its guidance despite pressure on costs, anticipating some upward pressure on costs, but they've actually been delivering. I mean, I know I'm now on first name terms with my postman just because of all the stuff I order and get delivered.
Are you a big Amazon? Is it Amazon that you
I mean, I'm in everything. I'm undiscriminatory.
Not going to stick with one name. Yeah.
No.
Good news for Royal Mail.
I don't go to bricks and mortars anymore.
Yeah, God forbid. Fran. That's so 2019, isn't it? Okay, let's switch focus then from Royal Mail and postal deliveries to what's happening in terms of chip deliveries, because they essentially aren't happening. That's what's hitting the auto sector, of course, and beyond. The total hit to revenue this year for the world's car makers is now estimated at $210 billion. That is the latest dire forecast from AlixPartners, which says the industry will build 7.7 million fewer vehicles, 7.7 million fewer vehicles in 2021 due to the chip crisis. Joining us now is Bloomberg's auto reporter, Craig Trudell. Craig, where are we then in this crisis around chips? Fran and I were discussing it's definitely not the end of the story. Are we getting at least close to some kind of resolution?
I think that was the hope late last year when we first learned that the industry was starting to worry about this. There was a concern that the auto industry kind of, essentially gave up its spot in line last year when they really had to slash production because of the initial outbreaks of COVID-19. And there was some concern that it'll take some time for them to sort of essentially get their spot back in line, but they would get there. We've now sort of gone through just month after month of setback where we've had issues with, extreme weather, we've had fires, we've had more recently outbreaks in Southeast Asia and in Malaysia where there's a lot of testing and packaging that's done. So this is both, a sort of an event-driven issue, but also a very structural issue because we're seeing that chips that the auto industry desires are sort of outdated. The chip companies are not necessarily eager to make the investment for outdated technology. So, we're starting to hear more and more from CEOs of the auto industry that this is something that will be with us for months to come and perhaps even years to come.
Craig, we're actually, starting to look at numbers. So according to AlixPartners, this could actually cost, or this could hit world automakers $210 billion in 2021. Is there then a danger that there's going to be too much chip production, or does it change the way that automakers then, produce and sell cars? There's a huge secondhand market now where, cars fetch like a 30% premium.
Right. I mean, we've actually, in today's story from AlixPartners, we mentioned the idea that some car makers, they're so short of cars, even just to show customers that show up to the lot that they're actually renting cars to sort of feature and allow for people to sort of kick the tires, which is just, something that, is sort of unheard of. I've in the dozen years that I've been covering this industry, I think Alix's estimates are really sort of reflective of how this has just snowballed. You look back, and in January, they were expecting this to be a $61 billion hit. That became $110 billion in May. Now they've roughly doubled their estimate just in the last few months. So this is a situation where, the industry is, to your point, absolutely going to have to sort of change their approach to selling, but also sort of their approach to their supply chain, where they really need to sort of forge closer ties with the chip companies. We're hearing a lot more about that as well. Just a couple of weeks ago, when the industry staged its first car show in a couple of years, Intel was one of the biggest keynotes. So, this is a situation where the automakers are sort of used to working with, the likes of Bosch and ZF and Faurecia. But they are absolutely going to have to, sort of make the semiconductor companies more, put more emphasis on those relationships going forward.
Craig, thanks so much. Craig Trudell there with the very latest on chip makers and autos. And I know there is also quite a lot of appetite on this story from AlixPartners, so we'll push it out on social media. Now, we just have some breaking news. French PMI is interesting, Tom, and I don't know whether it goes back to what we were talking about for the chip shortage, but manufacturing was worse than expected. And actually, if you look at services, are pretty much in line. It's not having a huge impact on euro dollar, but it could go back to some of the manufacturing.
Yeah, is this a supply constraint story or is this a demand story? So we'll dig into the details on that. But not an insignificant miss there, though. Of course, comfortably in expansionary territory, but well below those forecasts.
Yeah, 2 points lower. Now let's turn to some of the other tech companies or stories that we're watching. Cathie Wood says she would sell Tesla if its price hit her 5-year target in the coming year. Now, the electric vehicle maker's stock is now roughly $750, and her base price target in 5 years is $3,000. Well, joining us now is Matt Bloxham from Bloomberg Intelligence. Matt, there's a lot of stories actually that we want to talk about. If we start with Cathie Wood, I mean, is this a sell signal, or is she actually just comfortable that it could get to $3,000?
Yeah, I mean, I think it's more of just an insight into their the investment discipline. You know, I think for Tesla to quadruple in the next 12 months, particularly given the story just ran about chip shortages, would seem pretty unlikely. So yeah, I mean, I don't think there's too much to read into it. And yeah, it's interesting that the looking at the terminal, the average analyst target price is actually below 750. It's in the high 600s. So you know, there's quite a difference of perspective there about where analysts are and where Cathie Wood is in terms of the valuation of that company.
Yeah, just a small gap there, Matt. In terms of Facebook, switching from Tesla to Facebook, we've seen the departure of the CTO. What is the significance of that in light of what we've seen around the leaks linked to this company?
Yeah, I mean, I think certainly reading at face value, this is kind of somebody that's been at the company a long, long time, been a very public figure for them, worked incredibly hard, and looks like he just wants to take a bit more of a balanced life. And I guess a lot of people post-pandemic are kind of reevaluating how they spend their time between work and family, other issues. So, you know, I don't think it's too much of a concern for Facebook. I mean, he was head of artificial intelligence, which is clearly key to everything they're doing about developing the business and, you know, improving the quality of the product, taking out fake news and all that kind of stuff. But he's going to be replaced by another long-standing veteran employee of the company. So I think, you know, the future of that part of their business is in good hands. So nothing too concerning, I don't think, there.
Matt, what's happening at Apple? So we have been hearing stories about, you know, leaks, the chief executive cracking down on that. At the same time, maybe not, you know, all is rosy in the Apple kingdom. And now we hear that they're looking at bonuses for people that work in store.
Yeah, so I think up to $1,000 bonus for people that work in the stores. You know, which is a recognition of everything they went through the pandemic. But I think it's also a recognition that we're entering holiday season. You know, it's a massive time for Apple in terms of sales, and they need to have their stores and their online presence, you know, properly staffed. And it's clearly an incredibly tight labour market, not just in the US, but in Europe too. And they need to make sure they've got the staff there to sell the phones, to hit those bumper sales forecasts that analysts have for them.
All right, great stuff. Matt Bloxham from Bloomberg Intelligence giving us the latest on Apple, Facebook and Tesla. Okay, coming up, the Bank of England's policy puzzle. The BOE confronts rising inflation and slower growth. We are live from Threadneedle Street. That is up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Who are U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests?
Daniel Ricciardo, Michael Jordan, and then Tom Keane from Bloomberg.
She understands you?
Funny and very understandable.
I am reading in on tennis like nobody.
Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
China is the #1 manufacturer of renewable energy in the world. It's also the #1 deployed in renewable energy. But because it is so big, with so many people and such a sizable economy now dependent on coal, it must begin the transition sooner. So we hope China can peak earlier. We hope China can begin to reduce at some point sooner.
US Special Envoy for Climate, John Kerry there, urging China to do more to fight climate change. Okay, turning to today's central bank action now. Our UK economy reporter, Lizzie Burden, is outside the Bank of England for us. Lizzie, what can we expect then from Andrew Bailey today as he weighs up what looks like a slowing growth trajectory for the UK economy, but very high inflation?
Yeah, we're expecting the Bank of England to keep interest rates on hold at 0.1% and at least one of the 9-member Monetary Policy Committee to dissent in favour of ending asset purchases early. Last month it was Michael Saunders. We'll have to see whether any of his colleagues, including the 2 new additions, will join him this month. We'll also get an exchange of letters between the Chancellor Rishi Sunak and the Governor Andrew Bailey. That's protocol after inflation surged past the bank's 2% target to 3.2% in August, which neither economists nor the bank nor markets had predicted. But the question is, how transitory is transitory? The bank had forecast that inflation would peak at 4% this year and then fall in 2022 and 2023. But there are some signs that that price growth could persist because of the labour shortages, the material shortages, the energy cost rises that we've heard so much about. And paying our way out of the skills mismatch will only add to inflationary pressures if we don't get more output for those pay rises. But as you say, it's a bit of a balancing act because at the same time, the economic backdrop has dimmed somewhat since the bank's last set of forecasts. So it'll be interesting to see how the bank weighs the conflicting data we've had recently. It should show its thinking on what's really going on in the economy.
Yeah, and Lizzie, I think the Bank of England probably has it that much more difficult because of a lot of labour shortages, a lot of the price hikes have to do with Brexit. So it's not like the Fed, it's not like what the ECB is dealing with.
It's not like the Fed in the sense that you've got the difference in the outlook for employment. In the UK, you've got the risk that unemployment could spike when the furlough scheme ends, and that's why Bloomberg Economics doesn't see the first post-pandemic rate hike until the second half of 2022, whereas markets are pricing for it to come in the first half. And the difference there is because they are really focusing on the inflation figure. So it'll be interesting to see what the Bank of England is putting its focus behind.
Thank you so much, our UK economy reporter there, Lizzie Burden. And of course, we'll continue on the central bank's theme later today when we speak to the Norges Bank Governor, Øystein Olsen, after it announced its rate decision at 9:30 a.m. UK time. Don't miss that because it's an interesting conversation, of course, on inflation around the world and actually how some of the smaller economies, open economies, are dealing with interest rates a bit different than the bigger ones.
And didn't have to resort to QE because of their sovereign wealth fund, of course. And it's going to be the first, looks very much like it's going to be the first G10 FX central bank to raise rates, Fran.
Yeah, and you wonder whether that then gives an impetus to all the others. Coming up, workers return to the City of London and other global financial hubs. We'll speak to the Citigroup's chief executive for EMEA, David Livingstone, about the future of work. Don't miss that conversation. That's coming up next, and this is Bloomberg.
there is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to The Open, everyone. We're 30 minutes into the European trading day, and here are your top stories. A moment of truth for China Evergrande. A dollar bond coupon comes due today. Shares surge along with other Chinese developers as sentiment turns positive. Now, Powell's tapering timeline. The Fed chair says they could start scaling back asset purchases in November. The Treasury curve flattens and global stocks rally. And the Bank of England's policy puzzle will get decisions from the Bank of England, as well as central banks in Norway, Turkey, South Africa, and more. So, Tom, actually, if you look at the markets, they're pretty cool there. We saw a hawkish Jay Powell, but markets taking in their stride and suddenly not as worried as they were 2 days ago about Evergrande.
Yeah, Jay Powell threw them a bone in terms of the bulls by trying again to de-link the end of tapering, which he said is going to happen towards the middle of 2022, and the start of the rate hike cycle. But you had two key things that came from the FOMC and from Jay Powell yesterday. One is we now have a time frame for tapering, very likely to start in November and end at some point in the middle of 2022. Then you had the dot plots moving into 2022, but crucially, no consensus, no majority on whether or not you'll get a hike in 2022, but certainly a little bit more hawkish on that front. Crucially as well, and Fran noticed this, the PBOC pumping $17 billion of liquidity into the financial system. That is the biggest net injection in 8 months, and it follows a $14 billion injection yesterday. So again, the calming of the PBOC amid this concern about Evergrande. And we're looking, of course, for that dollar bond payment later today. The Stoxx Europe 600 gaining 0.7%. You had some Eurozone PMI out. We're waiting for Germany to come through. We had France coming in below the forecasts, but still comfortably in expansionary territory. You do have German manufacturing PMI, 58.5. That was a miss. The forecast was 61.4. So you have a miss from Germany and a miss from France when it comes to manufacturing. Whether that's a supply chain constraint or demand is something we'll dig into. The DAX, though, is brushing that off, gaining 0.7, close to 0.8%. Over in France, the CAC 40 is up 0.7%. We know that President Macron will be meeting with Joe Biden at some point to talk over those geopolitical tensions between the two nations. The FTSE 100 gaining 0.4%. Andrew Bailey and the BOE decision at midday, of course, in focus. The conundrum around higher inflation and slower growth in this UK economy. Let's switch it on to the sectors then and see how things are plaking down. Across the sectors, you're seeing green on the board. Top of the list is technology gaining 1.4%, followed by auto parts. We heard about the continuing constraints around supply chains and chip shortages. $210 billion hit. But that sector brushing off those concerns for the moment. At the bottom of the list, but still gaining 0.3%, is media. That is how things are shaping up 30 minutes into the European Open. Fran.
Yeah, we have the Swiss National Bank actually coming out with interest rates unchanged, repeating its intervention pledge. So we also heard from Mr. Jordan of the SNB saying that the franc is highly valued. It's probably one of the biggest concerns actually for the Swiss franc right now. We haven't heard any kind of talk about intervention, but they've been, I mean, we have heard talk about intervention, but nothing concretely on the markets just now. The Swiss National Bank keeping its policy rate and deposit rate at record lows. Again, talking about possibly pledging a wage currency market intervention. Now, if you work in central London, you might have noticed, actually definitely have noticed, that there are more people in the city. Workers are returning to the office as cities around the world begin to reopen. Well, here to discuss that and all the other challenges after the last 18 months of the pandemic is David Livingstone. He's Citigroup EMEA Chief Executive. David, thank you so much for joining us, and also in person. So I'm really excited as we see all this buzz kind of renewing around us. Has it been difficult to get people back in the office?
Of course, people are, good morning, and people are somewhat concerned, and they're out of the habit of being in the office. But I think we've been delighted with, particularly in London, and with the benefits of the vaccines in the UK, which have been tremendously delivered, that people are really encouraged. And we're saying that we are an office-based institution. People learn from each other and collaborate with each other so much better in person. And so we're actually very encouraged by the employees returning very actively to the office.
So how many people are in the office, you know, at any given day? I don't know whether there's going to be a hybrid model and how much time you spend thinking about it, because things could change almost at any moment.
They could, but I think we've learned a lot, not just Citi, but many institutions over the last 18 months, about putting in place, you know, various levels of confidence building, you know, techniques around the office. So at the moment, we're more than half of our people are coming to the office in London every single day, and we'll be on a hybrid model of at least 3 days a week, but giving people the benefit of flexibility, which we've also learned over the last 18 months that people do appreciate. That greater flexibility to be choosing where they work from for some of the week.
Do you think we'll go back to the office 5 days a week, or actually has the pandemic just changed everything for you know, the foreseeable future?
I think it's likely that there's a permanent change, but I think we'll have to see what people's practices and comfort level is. I think the predictions and the trough of the crisis that we'll never be in an office ever again, well, they've shown not to be correct. So let's not make a prediction just yet about what the permanent will be.
Fair enough. Gosh, do people who are not vaccinated, can they come in the office? I mean, this must have been one of the most difficult decisions actually to make for your staff.
Well, it's different in different countries. I mean, in our region here, I've been responsible for 55 countries, and so very different status of health situation, vaccinations, and so on. So we're just in each individual country making a different decision based on those conditions. To take London, for example, we can be confident that 90% of the population of our age demographic is likely to be double vaccinated. So we're relying a little bit like Bloomberg on testing, which we do regularly 3 days a week as employees come to the office. So that gives them that extra confidence.
David, I feel like every week, actually, every day, we're talking about, you know, junior banker burnout, about, you know, pay increasing. Has this been one of the, you know, how much more have you thought about some of the junior bankers now compared to pre-pandemic?
So I think we think about all of these elements. I mean, our banking, and I think you mean the discussions around particularly investment bankers and the heavy hours and workload. But we have 35,000 people in this region on a whole range of different activities, and that's a small component of our workforce. But all of those elements of I suppose balance in work, but also what is attracting people to work at an institution like Citi. How do we retain talent, and of course compensation is an element of that. But as we were just discussing post-pandemic, I think there are other elements that also attract people to certain institutions, and we were very delighted to be selected as one of the top 10 organisations in the UK for working families, not just financial services, but all organisations. So we take this area very seriously.
And so has that changed? Do people now, really want more flexibility? How has it changed from like 5 years ago?
Look, I think what the pandemic has done is it's shown what's possible. And I think if 5 years ago it was, well, how does hybrid working actually operate? I think we've had to test, and I think that's going to be it's proved. So I think it's now just how it will operate sustainably.
One of the conversations that, again, we have very often with senior banking executives is what does London become post-Brexit? So at the moment, there's still equivalency that, of course, starts in June 2022. Has it been difficult to get some of your staff to move out, out of London into other cities? And can London retain its financial crown?
I'll answer the second one first. Absolutely. There's no doubt about that, about London remaining the premier, not just within the European time zone, but also international financial centre for many reasons. And on the first, we started in a different position from many other banks. We have almost sort of 13,000 people in Europe today already, or sort of pre-Brexit. We operate in 24 countries in the EU and the EEA. So for us, it wasn't a case of needing to lift and shift a great number of people from London. It was augmenting what we already had, servicing European clients from Europe.
But how many, have you shifted any at all? I thought like a couple of hundred.
A handful of hundred, but against that number that I just quoted, that's a very small proportion.
How do you see actually Europe developing for Citi? So we have a number of Wall Street banks, that come here and use the UK almost as a sounding board for digital banks or, trying to be a disruptor. How do you see Europe?
So I think the challenge in Europe, particularly post-Brexit, you mentioned the equivalence on clearing coming to an end in the middle of next year, is exactly what will be the shape of European capital and banking markets. And there are some challenges. There's some real challenges because the depth of the capital markets aren't there. There's an over-reliance on the banking system and banking balance sheets for funding corporate activity in the Eurozone. And there are some, as we know, significant issues around capital markets union, banking union. They're not progressing particularly fast or successfully. And that's going to be an issue for European policymakers to make sure that they work out how are they going to fund economic activity structurally in the long term, particularly if they put in place sort of more sovereign-based restrictions on who can operate within the EU.
Even if you look at the clearinghouses, we had a warning from the Bank of England saying, it could lead, so it's almost a political decision that could lead to more fragmentation, which is basically a lose-lose situation for everyone in Europe. So,
not just in Europe. I'd say that what has the last 3 decades shown us about global capital markets? It's that the low friction, high velocity of capital being able to move across borders and therefore find the best liquidity, the best pricing, that is good for economies. And restrictions on that or interruptions on that will be the converse. And so I think what we need to be looking at is particularly for pension funds, asset managers, they want best pricing, they want best liquidity, and they want the forums they want to be able to choose the forums they go to find that.
Do you see a lot of anxiousness in amongst banks at the moment trying to figure out exposure to Evergrande, which is, it's not necessarily bondholders, it could be 3-4 lines down the line?
Well, from our point of view, we're not exposed, but I think the markets are looking at this and to see how a very significant debt restructuring event happens in China and what the consequences are. So yes.
Never dull. Thank you so much, David Livingston there, Citigroup EMEA Chief Executive. Now, coming up, the final round, the parties in Germany will take part in a televised debate tonight ahead of Sunday's vote. We're live in Berlin with all the very latest. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as assurance of the United States always protecting us. That's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
At the moment, we are not in a situation that there is no stimulus. We invested in Europe more than 750 billion euros, so a lot. And I think we have to go back to normal standards. If you look at the growth rates, yes, we are doing well in Austria with a growth rate of 4%, but most European countries are doing well at the moment. We have the situation that our unemployment rate in Austria, for example, is now lower than it was before the crisis. So I think the development is good. Things are moving in the right direction, and we should, of course, reduce the stimulus step by step.
Do you worry at all about a return of the north-south divide, where you have the tougher, sometimes more Germanic economies, which don't want stimulus, and you have the southern countries, and you end up with a political fight?
Well, I wouldn't say that our position is tough, but we believe in competition, and we think that the goal of the European Union should be to be competitive. So in the countries in the south, there's the need to do some reforms. I think some of them did a good job during the last years and are also developing in the right direction. But a debt union can never be the solution for us in Europe, and it will never make us more competitive. So I wouldn't describe our position as tough. I think it's a very understandable position shared by most countries in the north of Europe and also by Germany.
And that was the Austrian Chancellor Sebastian Kurz speaking to Bloomberg TV about fiscal stimulus. Coming up, we're going to speak to the Prime Minister of Greece, Mr. Mitsotakis. That is exclusively here on Bloomberg at 1:30 p.m. London time. Okay, as we count down to Sunday's elections in Germany, we'll hear from the parties currently sitting in the Bundestag in a televised debate tonight. After 3 debates between the Chancellor candidates, tonight we also hear from the smaller parties they may enter into coalition with. For more on the state of play in Europe's largest economy, Maria today, of course, on the ground in Berlin for us. Maria, what have you got?
Yes, and you know, Tom, this debate today is very crucial because there's a number of things we're looking out for. One, of course, you mentioned it, there is the potential coalitions, and then two, a specific position in terms of what the makeup of each coalition would offer German voters. And to debrief all of this, I'm happy to say we're joined by Reinhard Bütikofer. He's a member of the Green Party. He's also an MEP that specializes on China, and if I can say, a close ally to Annalena Baerbock. Mr. Bütikofer, always great to see you. I have to ask you, you know, come Sunday, the Greens at one point, you had so much momentum going into the election. The polls now say you're coming in third. What kind of role do you see and envision for your party?
Well, I still expect the best result ever by far. And we are aiming at really reshaping German policies in very fundamental ways. In particular, we want to create a new energetic focus on the economic transformation, the digital and green transformation, which I think is completely imperative, not just in order to save sustainability, but also for future competitiveness. Then we're going to focus on fighting child poverty. Every fifth child in Germany is living in poverty. That's a little known fact, but it's still a scandal. And we also would want to toughen the foreign policy stance from Germany towards some of the authoritarian leaders around the globe. So these are three dimensions in which we intend to make a difference.
Right, and I want to speak to you in detail about the foreign policy, but before that, based on everything that you just told me, it does seem to me that what you envisage will need a more left-leaning coalition. You know, it's hard to see all of that happening, perhaps, with someone like Christian Lindner. I mean, where do you see potential coalitions and a compromise emerging?
Well, on climate policy, on industrial transformation and foreign policy, I don't see that much of a difference between the candidate from the Conservatives and the candidate from the Socialists. So in any case, we should have a major task on our hands to not just stick to the status quo. And we're not going to give any promises for a particular alliance after the election. We're going to talk to all the contenders and see how we can influence Germany's policies the best.
Right, and you know, in terms of foreign policy, I know that's an area where you like to focus in detail. You know, the criticism to Angela Merkel is that she's made foreign policy based on trade. Germany looks and pursues trade deals, not foreign policy, in particular when it comes to China. Do you think that status quo can continue with the next government, or do you really have to toughen up on China big time?
Well, I would indeed agree that to some degree, Germany had more of an automotive foreign policy than a real foreign policy. And Mrs. Merkel, who started her career with courageous moves in the China relations, has fallen behind the curve, I would say. She's out of sync with the reality of Xi Jinping's China. And I would argue that all the major democratic parties in this election have adopted language in their electoral platforms that it's much tougher than what they used 4 years ago in the last run. So regardless of the precise composition of the next government, I would expect a tougher stance on China and a more united European stance on China, supported from Berlin.
And you talk about a European united standard. Do you think the deal that we saw from Australia and the US and that very furious French reaction, is that going to force Germany to become more assertive too on a European response to go bigger on that front?
Look, it's unfortunate for Germany to see our two best allies, the United States and France, at odds in the way that has evolved over the last couple of days. But I think that President Biden has taken a very good step in signaling some self-criticism and some willingness to accommodate the concerns. Certainly, the way in which France has been treated in the context of the founding of the new AUKUS alliance, that is just unacceptable, not just from a French point of view. There is a huge deal of solidarity also from Berlin and the other capitals. But on the other hand, obviously, we don't want to see transatlantic cooperation going down the drain.
And Mr. Bütikofer, very quickly in 10 seconds, do you believe that the EU-China deal is going to get ratified, or is that deal now completely dead?
It's not completely dead, but if it ever gets ratified, probably not in my lifetime.
Which we hope is going to be a long time. Mr. Bütikofer, thank you so much for your time today. That was Reinhard Bütikofer, member of the Green Party, a close ally, by the way, of Annalena Baerbock, and of course also always looking out for Chinese policy in Europe. Francine, Tom?
Thank you so much, Maria. Maria will be joining us on Sunday to bring you special coverage of the German elections. We, of course, start at 5 p.m. on Sunday and we'll be live for 2 hours. Up next, we go back to the markets. This is Bloomberg.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, 55 minutes into the European trading day. And look at that, for the moment, it's a green. We'll take it, Tom. It could actually change at any minute, but actually if you know, the Fed was taking kind of, traders took it in their stride. We have Norway at the top of the hour, so let's see what happens with interest rates. And then Evergrande, I'm unsure why people are so cool about it right now, given the sell-off we saw on Monday.
Yeah, this was something also flagged by the team at MLive. Look, there's a bit of catch-up you're seeing. The stock was up today, and it's come off a little bit, some selling there. Why is there optimism around this? They made that bond payment. Well, we don't know if they made the bond payment onshore. They've come to some agreement, and they got the offshore later today. Yes, this company and the travails around it continue. You did, of course, have the PBOC. This was really important coming out, that liquidity injection. But this company has just gone into all sorts of different areas.
Yeah, and it was interesting to hear from Mark Cudmore. I mean, this is also traded almost as a penny stock, so I don't know whether, because it's gaining today, we should read, too much into it. And you were talking me through, so I've been reading about Evergrande a lot, but there's things that I just didn't know. I mean, they had this, they haven't sold one single electric car, but they had a unit that was, valued as much as Ford.
Yeah, Unstoppable Gallop is the name, is how it roughly translates. They had 9 vehicles. They never managed to produce any of them, never managed to sell any of them. They had them on display in April at the auto show. Yeah, what a story. They're also in the bottled water market as well. Because why not, as a real estate developer?
We call it a real estate developer, but actually it's
more of a conglomerate.
So much more.
Yeah.
I love having Tom's perspective, so thank you, Tom McKenzie, there with the very latest, of course, on Evergrande. And we continue watching the markets. That's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Evergrande situation, it seems very particular to China.
At this point, I don't see this developing into a global crisis.
There is potential for second and third order impact.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 23rd of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Taper timing. The Fed signaled that it's probably ready to cut bond buying in November, and a rate hike may not be far behind. The markets aren't convinced. Evergrande shares and bonds rally from lows as investors bet it will avoid a disorderly debt resolution, but it's yet to make payment on a 5-year dollar note. And John Kerry calls on the world to step up and fight climate change.
Hello traders, good morning. I'm going to place an order to buy euro. The price I'm looking to buy 117, 122. If you have a strategy, if you follow our trades, please do place an order to buy at this level. Okay? I'll speak to you later.
Because of the nature of the economy, I'm not sure we'll put that extra bit of pressure on, for example, the ECB, the Bank of England, or even the Fed, of course, to hike, but it will mean a difference to how markets maybe interpret some of the transitory inflation. 12 p.m. London time, the Norges Bank Governor, Øystein Olsen, will be live on Bloomberg TV. Now, this is what your markets are saying today. We are seeing a lot of green on the screen. The Stocks Europe 600, you can see gaining some 1%. Partly this is because of what we heard from Jay Powell. The market, I mean, he threw them a bone, and the market kind of saying, yeah, you'll raise rates, but not anytime soon. And for the moment, it's been telegraphed and hasn't been actually repricing some of the asset classes. The DAX and the S&P futures also gaining some 0.6 or 1%. The focus is on Evergrande, and I think the question is there, after the huge sell-off that we saw on Monday, is it really the right resolution? We know that PBOC injected money. Maybe there's a bit of, something to be said about that. Here in the UK, we have 2 energy producers going bust, something that we need to keep an eye on. The DAX gaining 1%, the CAC 40 0.8% higher. So it's a key test for Evergrande today. That's as the distressed Chinese developer faces a dollar bond interest payment deadline. Now, the company's stock rallied before pairing the advance, which may be an indication that investors remain wary over debt talks.
Okay, traders, position opened 117, 122. All of you guys who decided to trade this pair, well done. You're in, stay with me, and we will go through this trade until the end. Stay safe, guys.
At this point, I don't see this developing into a global crisis.
There is potential for second and third order impact, particularly on the capital markets and the bond markets. And we've got to stay close to that.
They own everything. They own the land. They own the companies, the banks. They control the news. So I don't see this kind of loss of trust that actually brought Lehman and the whole system down.
Well, the Evergrande crisis taking a toll on funds in Europe and the U.S. that have chased high yields in the Chinese corporate bond market. The situation has weighed down funds managed by Ashmore Group, BlackRock, UBS, and HSBC, amongst others. Well, we're now joined by Scott Thiel, Chief Fixed Income Strategist at BlackRock. Scott, great to have you, especially on a day like today where the markets seem actually quite exuberant. They seem pretty cool about what's happening with the Fed and Evergrande. How do you see Evergrande actually going from here? How much of a concern could it be to the world economy?
Well, I mean, I think, it's too simplistic to say this is not a Lehman moment for China. And I think that kind of paves over some of the complexity, obviously, that exists in China and also at the company level. But taking a step back, I mean, I think the way to think about this is in the context of China has very much been on a path of implementing social change, address things like pollution, inequality as examples. But they're also obviously focused on growth. And so as we see growth decelerating, growth in China was around 17% at the beginning of the year, decelerating to around 7% mid-year. Our estimates are that it could come in around 3% towards the end of the year. That's below their growth target. And the reason I bring that up, Francine, is that it's going to matter if it's that much below. And so we don't see this as becoming,
How much does it matter? Who does it matter to most?
Well, I think it matters obviously to the real estate sector in China. But as noted by some of the comments from central bankers, right, the exposure to the financial sector, for example, is very small. on an overall basis. So I think it matters in a sectoral basis, particular parts of the Chinese economy. But overall, I would say it's, again, not a Lehman moment in that sense. But obviously, we have to watch the contagion. Property prices would obviously be a focus for us as we go through time. Thus far, they haven't shown a substantial pullback, but that would be one area we would be focused on.
Scott, how do we understand the second round and third round effects at this moment? Could we be actually misunderstanding the situation?
Well, I mean, I don't think misunderstanding is the right way to think about it. What we're trying to do is observe where we can see the impact, right? And so, for example, we look at the banking sector's exposure to Evergrande. It's relatively small, 0.2% roughly. And so what we're going to do is we're going to watch as the sectors that are most impacted by the company, as that evolves. We'll watch how those unfold, and that'll give us a telltale sign as to the broad.
Let's place stop on profit at 117.14.2. Okay. Just right here. Stop on profit placed.
And we saw a reserve ratio requirement cut. We've seen injection of liquidity as noted last night and the day before. Those are indications, right, that the levers that China can pull, whether it's monetary policy, fiscal policy, regulatory policy, are going to, foreshadow a more supportive background to help the country through the crisis of the company, but importantly also to address the growth concerns.
Thank you so much, Scott Thiel, Chief Fixed Income Strategist at BlackRock, stays with us. We'll, of course, talk about the Fed, and we'll also talk about the Bank of England shortly. Don't miss our special coverage of the Evergrande situation right here on Bloomberg TV. That's the Evergrande Effect, coming up on Friday morning, 2:30 a.m. UK time. Now, coming up, Jay Powell signals the Fed could start tapering in November. The Fed chair also says rate hikes might not be that far behind. We discuss that latest next, and stay with Bloomberg Surveillance Early Edition. Later on in the program, we also speak to the London Mayor, Sadiq Khan. If you have any questions for him, IB Plus TV Go. This is Bloomberg.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just two girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. While no decisions were made, participants generally view that, so long as the recovery remains on track, a gradual tapering process that concludes around the middle of next year is likely to be appropriate. Half of FOMC participants forecast that these favorable economic conditions will be fulfilled by the end of next year. As a result, the median projection for the appropriate level of the federal funds rate lies slightly above the effective lower bound in 2022.
Well, it's almost taper time, and rate hikes may not be far behind. That was the message from the Fed Chair Jay Powell. Let's get back to Scott Thiel, Chief Fixed Income Strategist at BlackRock. But Scott, really, the reason why the market seemed quite cool about it is that there is a clear timeline, and this was, what the Fed wanted to do, in some parts also what the ECB wanted to do, which is, tell the markets cool off. We're tapering. It doesn't mean we're hiking rates straight away.
Yeah, that's right. I mean, I think they've done a fantastic job. We were talking about this a second ago. I don't like the word divorce, but they've divorced the tapering from the rate hike process. And so the markets are very comfortable with that. They're very comfortable that they've telegraphed the tapering. There will be a period of time in 2022 when the taper is over before they begin the process around liftoff. And the market is very comfortable. Look, it's a central banker's dream when your 10-year note or your 5-year note is more or less unchanged on the day of a policy meeting, and the 5-year was a little bit higher in yield. The reality is the volatility in the Treasury market has been unbelievably low, right, over the last month or so, even around what's happening in China, which I think is very interesting. But the idea is that this has been very telegraphed, very clear, very transparent, and so the markets like that.
So, Scott, what does it actually mean for treasuries? Is there anything that you'd be buying right now?
Well, I mean, the Treasury market in our mind is, we see pathway for rates to be gradually higher, right? We're in an environment where as the Fed has talked about, the inflation target has been met, but the employment target is still something that they're watching very closely. In that environment, we see rates rising, but not dramatically over the next couple of months, couple of quarters. And so for us, we are underway treasuries in our asset allocation on the view that, that we are at the precipice of a taper and then eventually a liftoff. And given valuations and particularly low level of volatility, we think treasury rates will move higher.
All right, Scott, let's also talk about the Bank of England. Just a few weeks after warning that interest rates need to rise in the next few years, the Bank of England finds itself facing a delicate balance of risks as the recovery stalls and inflation accelerates. Now, you could call it the central bank policy puzzle. So we'll get back to Scott in a second, but let's also get to our economy reporter, Lizzie Burden, who's outside the Bank of England. And Lizzie, we're just talking about the Fed. Brexit complicates matters in terms of labor shortages and possible inflation pressures.
It does, and there is the risk that unemployment spikes in the UK when the furlough schemes ends at the end of September this month. But at the same time, you've got the inflation number from last month. It surged past the bank's 2%.
Okay, traders, let's move our stop to 117, 17.2. It will give us 5 pips in profit. And whatever happened, you will not lose any money. You're already in profit. Okay, guys? Good start, yeah? Okay, good. Stay with me. I'll speak to you later.
What are you expecting from Andrew Bailey today? I think, Scott, we're just having a couple of issues with your microphone, but we'll get that fixed, hopefully, and we'll come back to you very shortly, of course, on what to expect from the Bank of England and possible moves also in gilt. Scott, I hear, and I've been told that actually we can now listen to you because your mic has been fixed. What are you expecting from Andrew Bailey? Second time lucky.
Sorry. Yeah. I figured after a year and a half of this, get this right. But in any event, sorry. No, I mean, we don't expect any change today, and we don't expect any votes for a rate hike. I mean, I think that the bank, continues to face this dilemma which policymakers are facing globally, which is you have very high near-term inflationary pressure, but expectations for that to tail off as we go through time. Obviously, the banks that do not have this average inflation targeting framework the Fed has implemented, the question about how high inflation prints now impact policy decisions going forward, it's something we talked about with the ECB, is an interesting topic, but no expected change today. And also no expected votes for a rate hike today.
But, Scott, could you see, so we had, of course, Norges Bank being the first G10 central bank to hike. Does that put any pressure on any of the other central banks to start moving maybe more than the market is expecting?
No, I don't think, necessarily one bank presses the other. Obviously, I think it's more about the inflationary dynamics in each country and obviously the policy framework, for each country. Right. Again, I think it's really important. We talked about the ECB at the very beginning of this conversation, right? Past, right, Elga Barch has said, let bygones be bygones. I think that's a very interesting way to put it, right? High inflation prints now don't necessarily impact policy rates going forward if inflation were to come down. And that's obviously very different than an average inflation targeting framework like the Fed, for example. So no, Francine, I think it's the Norges Bank is not going to pressure the Bank of England in that sense, but obviously the inflationary environment would be the thing to watch.
Scott, thank you so much, as always, for your insight and wisdom. Scott Thiel there, Chief Fixed Income Strategist at BlackRock, joining us today. Of course, at 12 p.m. London time, the Norges Bank Governor Øystein Olsen will be live on Bloomberg TV. That's after Norway's central bank hike. It's a key rate to 0.25%, and that's also the time where we expect the Bank of England decision. Now, coming up, exclusive networks, Paris IPO debut raises 366 million euros. It's the latest in a string of cybersecurity offerings as concerns grow about the spike in ransomware attacks over the last year. More on that next. This is Bloomberg.
Serving leader is leaving. Who will run Germany next? Join Francine Lacroix for the first results and analysis on Bloomberg Germany Decides. Tune in for live coverage beginning at 5 p.m. Sunday on Bloomberg Television and Radio.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot of going on in the markets. Actually, we're seeing green day across the board, but we've had a lot of central banks coming up with interest rate expectations. Of course, yesterday, the big one was the Fed, and this was something a little bit new, actually, just because stocks are gaining after the Fed taper guidance. Now, cybersecurity firm Exclusive Networks fell as much as 1.5% earlier this session after the company and its holders raised 366 million euros in a Paris IPO. Now, the listing adds to a string of cybersecurity offerings. That's as 2021 saw a sharp increase in ransomware attacks globally, including the hacking of Ireland's health service, as well as the Colonial Pipeline attack, which led to fuel shortages across the eastern U.S. Well, we're now joined by Jesper Trolle. He's the chief executive of Exclusive Networks. Mr. Trolle, thank you so much. On such an important day, also joining us to talk about the future of cybersecurity. Is it getting much more expensive? Is it getting much more difficult to try and stop some of these attacks or ransomware?
Yeah, first of all, thank you for having me on this show on this big day for Exclusive Networks. It is getting more difficult to defend yourself against cybercrimes. I think the adversaries are getting, more and more advanced, and as a result of that, we have seen a rapid increase in cybercrimes around the world, as you alluded to in your introduction.
So what does it mean, Jesper, in terms of some of your biggest and most difficult decision in the next 2 to 3 years? So now you're IPO'd. What does it mean for investments? How much will you have to spend on? Are there new ways of attacking and getting into our IT systems that hackers will change?
Yeah, for us, it's, it's really business as usual. Tapping into the public markets was a natural next step in the company's life. This obviously gives us an opportunity with the capital we have raised to continue to accelerate the implementation of our strategy and growth strategy. Driving geographical expansion, continue to add new solutions, and frankly accelerate getting those solutions into the hands and arms of the end customers that clearly needs to defend themselves against all these cybercrimes.
Yes, so Jesper, we were extremely excited to have you on, not only because of the IPO, but just to try and understand, of course, this space, which very few people understand. Who are your biggest customers, and will that change? Is it mainly, could it be mainly big companies that are trying to protect some of their IP, or is it, me and my producers just trying to, protect personal data and, for example, bank fraud?
I think it's all of the above. To explain who we are, it's really, I always say we're the company behind the companies So some of the big partners we have are companies like Palo Alto Networks, Fortinet, SentinelOne, to name a few. And we help them work with these companies and help them get their products out in the markets, oftentimes far away from, their own domestic markets. And obviously, as we talk about here with this acceleration of cybercrimes, there is a even bigger need today than there's ever been to, continue to drive this adoption of cybersecurity. I think what's driving it is, first of all, we have all changed the way we work. Most companies today are in hybrid environments. People are working from everywhere, the home, the office, cars, etc. And, that opens up the network to adversaries. We also use the cloud more than we used to do, and every company is using digital transformation, relying on data, relying on the IP. And as a result of that, there are a lot of people out there who want to get hold of that information. So that is what's driving this secular growth within the cybersecurity market.
Jesper, how much actually do we see, how much of these ransomware attacks, how much of these attacks and hackers overall are state-sponsored? How difficult is it for you to know that figure?
I don't have that figure. I think, you know, it's in the press that some of those probably are state-sponsored, but, you know, I don't have the right, I don't have the background to say if what the number is, quite frankly.
How much will your company grow in the next 4 to 5 years? And are there any parts of the market that you're not in at the moment that you want to be in?
Yeah, you know, we are a global cybersecurity specialist, and we are constantly focused on expanding our geographic footprint. Today, we are present in 40 countries around the world. We are doing business in about 120 countries. There are still obviously a lot of markets that we are not in, and we want to grow and expand there. You know, in terms of the future, we want to make sure we continue to grow at or above the total cybersecurity market. That's how we've been performing in the past, and that's the cursor we've set out.
Great, thank you so much. Jesper Trolle there, the Chief Executive Officer of Exclusive Networks, joining us this morning. Now, stay with Bloomberg Surveillance, early edition. Up next, we also speak to the London Mayor, Sadiq Khan. If you have any questions for him, please, IB Plus TV Go. The focus, of course, is on the markets. The focus will be a lot more on Evergrande. Evergrande traders selling into stock gains with some of the dollar coupon due. We'll have plenty more on that shortly. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Taper timing. The Fed signaled that it's probably ready to cut bond buying by November, and a rate hike may not be far behind. The markets aren't convinced. Evergrande shares and bonds rally from lows as investors bet it will avoid a disorderly debt resolution, but it's yet to make payment on a 5-year dollar note. And John Kerry calls on the world to step up and fight climate change ahead of COP26. We'll speak shortly with London Mayor Sadiq Khan as he unveils a new initiative to make the city greener. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the markets with our Danny Berger looking at all asset classes. So, Danny, what was the reaction to the Fed? And good morning.
Yeah, good morning, Francine. Look, it's pretty interesting because we do have a market that's pushing higher this morning when it comes to U.S. futures. It was also the same way yesterday as well, the first positive session for the U.S. benchmark equity index, the first positive one in 5. So we're up higher by about a 7/7 of a percent, 0.7% rather, for S&P 500 futures. A very interesting reaction to the Fed yesterday, given that, as Tom Porcelli over at RBC put it, that this was a much more aggressive building in of rate hikes than many had thought that they were willing to stomach and take on. So you had equities moving higher. Typically, a more aggressive, more hawkish Fed would cause them to perhaps at least be more muted. But let me also show you what the 530s curve has been doing as well. We've seen some pretty extreme flattening in the yield curve over the past 24 hours, at one point hitting its thinnest level since May of 2020. So a couple things can be interpreted from how the market has taken this. I was talking to Alberto Gallo of Algebris earlier today, who simply said the market doesn't believe it. They think that the Fed is going to keep accommodating, that they're going to keep giving anesthetic to the patient, as it were. Or you could take the other view that by acting aggressively, the Fed may be heading in towards a policy mistake, that indeed the hawkishness really just means that down the line they'll have to reverse course and cut, which is why we're seeing this flattening of the yield curve, Francine.
Yeah, so a muted reaction from the Fed. Plenty of other central banks this week. I mean, it's not dull. Is there potential for more excitement, Danny?
Look, I think perhaps the most potential for excitement is the Turkish central bank. So here's what the lira is doing at the moment. Not too much of a movement. It's a little bit stronger versus the dollar, but we've had just a generally weaker dollar so far today. The drama here could come is if the central bank is very, very dovish. They have very high inflation, but Erdogan has been very clear in saying that the next move should be a cut from the central bank. So if the bank tries to start to prepare people for that, we could see some pain in the lira. But otherwise, we had a decision from Norges Bank just about 30 minutes ago. They did indeed raise rates. That's what we expected. Also, their projection getting a lift. So we are seeing a stronger krona versus the euro. And then we have the pound. Again, a lot of these things are kind of built-in expectations already. The positioning is already there. And of course, we expect the BOE to stand pat, not move. So a pound stronger by about 0.3%. But Francine, I should just say, it's really dominated by a weaker dollar today.
Yeah, it certainly is. Danny, thanks so much. Danny Berger there with some of the currencies we're watching. Now, America and the world all need to step up the fight for climate change or against climate change. That's the message from U.S. Special Presidential Envoy for Climate, John Kerry, just weeks ahead of the crucial COP26 summit in Glasgow. Now, as his country's parliament tries to push through legislation to up climate spending, he pointed to the hundreds of billions of dollars spent in managing weather disasters as impetus to make a deal. Well, he spoke with David Weston.
I think more countries are becoming aware they've got to step up their game before we go to Glasgow for the Conference of the Parties meeting. We also have had the United States, President Biden, put on the table a doubling of the amount of money that the United States will do in terms of the 100 billion total that has to be put together. China announced yesterday they will no longer fund coal externally in other countries. So people are taking steps. People are beginning to build some momentum, I think. The question is, will it be enough?
So, as you say, President Biden doubled the commitment from the United States toward the $100 billion. Is that enough? Because I've seen some estimates that say that actually it should be more like $40 billion should be the U.S. share toward that $100 billion.
Well, they doubled the doubling, and I think everybody understands that we have a complicated Congress right now. I think it's what the market will bear, but it's also a significant increase of the United States effort. I mean, President Biden is putting more, about 11 billion plus on the table And that's an important contribution. Other countries need to also do their part.
You said what the market will bear, maybe what Congress will bear. Is it your best estimate, having served there for so long, that actually you can get the $11.4 billion through this Congress?
Yeah, for sure. I really believe that. I think that there's a majority in Congress now that understands after this summer, Mother Nature's messages to the United States and the world have been pretty clear, and that is that the climate crisis is growing. It already costs us hundreds of billions of dollars. That's what we spend for the intensity of the storms we're witnessing, the flooding, the amount of fire loss, damages, the warming of the ocean. These things are all growing in their ability to be able to disrupt the marketplace. And if you want to look at real cost, that disruption is hundreds of times beyond the amount that's being asked to help solve the problem.
Well, that was our interview with the U.S. Special Envoy for Climate, John Kerry. Remember, you can get more of that interview and all of our climate coverage at Bloomberg Green on TV and online from this weekend. Of course, we'll be speaking shortly with the London Mayor, Sadiq Khan, about his plans for the city. Coming up, Cathie Wood says she would sell Tesla if its price hit her 5-year target in the coming year. We'll have more on that and a roundup of all the latest tech news next. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, here in London, Mayor Sadiq Khan will launch a citywide environmental campaign in the run-up to COP26 today. Now, following the expansion of the ultra-low emission zone in October, the mayor will encourage business and communities to take action to help halt climate change. Now, the Live and Breathe London campaign will highlight the emergencies of air pollution, heat, and flooding in the UK capital. And we're delighted to be joined by the Mayor of London, Sadiq Khan, right now. Mayor, thank you so much for giving us a little bit of your time. This is a campaign to try and spur citizens and businesses alike to be better citizens and fight climate change. What should people do? Is it, you know, the citizen that's not doing enough, or is it big business?
Well, firstly, we've got to recognise that we face a real emergency in relation to both climate change but also air pollution. We're at a crossroads. And unless we take bold action, the consequences of either inaction or delay are catastrophic for our city and the planet. Here in London, This summer, for example, we saw, as a consequence of flash flooding, as a consequence of surface water flooding, half the lines that are underground not being able to be used, with 31 stations closed down. As a consequence of the heat wave, we're seeing older people's homes being really worried about people overheating. But I'm here at a primary school in the heart of our city, Francine, and this primary school 4 years ago, the children were breathing in toxic air on the way to and from school. Because of our policies, the world's first ultra-low emission zone in central London, they're now breathing legal, lawful, clean air. What I'm announcing today is that in 33 days' time, on October 25th, we are going to go ahead with the expansion of the ultra-low emission zone, trying to reduce toxic emissions, NOx, particulate matter, and carbon emissions to address the challenges our city, our country, our planet faces.
Could we do more, Mayor? If you look also at some of the, for example, some of the things talking about the rising temperature levels, but also the rising water levels, do big metropolises like London need to go a step further to really make sure that everyone is behind this effort?
Absolutely. Part of my job is, in a non-patronising way, educating Londoners, whether they are pupils, teachers, businesses, politicians with councils, and lobbying the government to make sure we understand the scale of the crisis we are facing. Actually, cities across the globe have really bold, progressive policies. We're asking for not just our citizens, but our national governments to take bold action in 40 days' time when the world meets in Glasgow for COP26 in Paris in 2015. The world agreed what needs to be done. Now we've got to show and act on how it's going to be done.
Mayor, inflation is rising. Energy prices in particular are rising. This is at a time where a lot of the furlough schemes will also be scrapped. How worried are you about living standards of Londoners?
I'm really worried about a potential perfect storm with the furlough scheme ending in this country at the end of this month, the government having taken away universal credit, £20 uplift for every week, at the same time as energy prices are going up, and from next March and April, the government's requiring a disproportionate contribution from hard-working poor Londoners to contribute towards social care. That's why it's so important for the government to reconsider its plans to remove the £20 a week contribution towards universal credit. And it's so important the government doesn't remove the cap there is on energy prices. It's really important we understand the real challenges hard-working Londoners and those across our country are facing. And that's why I'm calling on the government to make sure we keep the energy cap, we keep universal credit, but we don't have those who are working, who are the poorest, paying a disproportionate amount towards social care costs for the future.
Is there anything that you as mayor can actually do to help?
But US mayors have done a great job. US mayors I speak to regularly, in the 4 years when they had a president who didn't believe in climate change, were still leading the way with some really bold progressive policies to address both climate change and air pollution. We've got a group called C40. They represent a population of more than 700 million and more than 90 mayors. And US mayors are part and parcel of C40. We're meeting also in Glasgow to talk about what more we can do. And one of the things we're trying to do is to share best practice. And so, for example, New York and London are working together to divest our pensions away from fossil fuels. I'm working really closely with mayors across America, from Austin to Phoenix and Los Angeles, about policies to address the crisis in relation to air pollution. It's really important that all of us together, whatever party we're from, whichever city we represent, we try and persuade our national governments to do far more in 40 days' time in Glasgow.
Mayor, are you worried about the recovery of central London because of the working from home trend? Or is that something that could actually benefit, for example, our fight with climate change?
Look, I think one of the things this awful pandemic has done is cause a real challenge for global cities like London, Paris, New York, where we have normally tens of thousands, millions of people coming to the centres of our city to work, to do leisure, for entertainment, and to eat. What this pandemic has led to is large numbers of people working from home, doing their leisure from home, doing their shopping from home, doing their eating at home. And if we're not careful, that poses a real challenge to these global cities. So what we're going to do is to encourage people back to the centres of our city in a safe, COVID-safe way, in an environmentally friendly way, walking, cycling, using public transport. Our ecosystems rely upon our sense of our cities doing well. I'm also somebody who believes that Zoom and Teams can't replicate what physical contact brings in relation to creative collaboration, in relation to team building, in relation to mentoring. So I'm speaking to, on a daily basis, not just businesses in London, encouraging them back to heart of our city, tourists to come back to our city, but also to recognize that actually this awful pandemic does, though, provide opportunities. We've used the awful pandemic as an opportunity to increase fivefold the amount of safe cycling in London, to widen our pavements, to make sure we have a green recovery. I think it's possible to have an economic recovery that's a green recovery.
Mayor, on the pandemic, I mean, we have a lot of people actually writing in asking why not enough people are wearing masks on public transport. Will that deter a lot of tourists from coming in?
Well, I used public transport today from early this morning, and the vast majority of Londoners and visitors are in face masks, but some aren't. And that's one of the reasons why I was lobbying the government in advance of July the 19th, when the restrictions were lifted, to continue the national requirement for face masks to be worn, because that gives simplicity and clarity, but also to give us the enforcement powers we need by making it a law. We could then use the Met Police Service, we could then use British Transport Police. The government chose, for reasons they are better explaining, not to do so. So all we can do is use it as a condition of carriage. So our enforcement officers, if you aren't in a face mask, will not allow you onto a bus or public transport. If you're on public transport and you're not wearing a face mask, they will ask you to leave. But I'm hoping Londoners and visitors do the right thing, which is to wear a face mask. You wearing a face mask is one of the most unselfish things you can do, because it reduces the chances of transmission. And when I remind you that 1 out of 3 people who have this awful virus won't show symptoms, hopefully is a motivation to wear a face mask when using public transport, when you can't keep your distance and you may have the virus.
All right, Mayor Sadiq Khan, thank you so much for joining us. Of course, he's the mayor of London on this green initiative. Now, let's turn to some tech stories that we're also watching. Kathy Wood says she would sell Tesla if its price hit her 5-year target in the coming year. Now, the electric vehicle maker's stock is now roughly $750. Her base price target in 5 years is $3,000. Now, for more on all of this, we're joined by Matt Bloxham from Bloomberg Intelligence. Matt, I mean, this, is very high top on red, but actually this seems pretty basic. It's if it hits 3,000, Kathy Wood sells.
Yeah, that's right. I mean, it's a quadrupling of the share price. So I guess if anything, maybe she's trying to make it a bit of a buy signal, strengthening her case that, she really sees long-term value in that company. But yeah, it seems like she was just articulating, a fairly straightforward investment framework. That, if a stock hits what you think that its fair value is, you sell it. But I think, given an earlier story you had today about shortage of chips for the auto industry, the outlook for the car industry, including Tesla, probably in the next 12 months, suggests that maybe it's not going to quadruple after it's had such a strong run already.
Matt, we also have quite a lot of stories. Facebook, so its chief technology officer is leaving. Is there anything, more to the story?
Yeah, I mean, I think he's obviously a very long-term employee and he's going to be replaced by another very long-term employee. I mean, he was head of the AI unit, amongst other things, and AI is, central to lots of things in the world, particularly for Facebook in terms of how they manage, fake news and, harmful content on their sites. So, it's a sensitive role, but I think there's a kind of smooth transition of responsibility there within the company, and I guess it's inevitable that people move on, and sounds like he's really looking to take a bit of a different balance of his life, which a lot of people are doing after the pandemic. So something that they need to manage carefully for such an important role, but looks like it's going to somebody that has a great knowledge of the company and the right kind of skills.
Matt, talk to me a little bit about Apple. So Apple, I mean, there's a couple of rumors about, leaks and people not happy at the company, employees actually being concerned about some of the things happening. And now we have this bonus for, I think it's the first time that Apple is doing this for some of its employees, up to $1,000.
Yeah, that's right. $1,000 for their retail staff, both in stores and online. I guess, we're heading into the Christmas period, which is incredibly important for Apple in terms of selling iPhones. Obviously, just launched the iPhone 13. So they want to make sure their stores and their online presence is fully staffed and they can sell as many of those phones as they can to meet analysts' kind of lofty sales expectations for the quarter. I think the leaks, obviously, Tim Cook, expressing some frustration. It is true that, these days there's not really any surprises when they do these big blockbuster announcements of the next iPhone. But I guess in such a large company, leaks are inevitable. And to some degree, companies do participate in leaks to make sure that the narrative in the market is going in the direction they want it to go. So I don't think too much there that could be done really to kind of suppress those leaks. But, the $1,000 bonus, reflects the importance of this quarter to the company and the tightness of the labor market, not just in the US, but globally, I think.
Matt Bloxham, thank you so much for joining us. Of course, he covers all things media and tech from Bloomberg Intelligence. Coming up, the final round. The parties in Germany will take part in a televised debate tonight ahead of Sunday's vote. We're live in Berlin with the very latest. That is next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Germany is the biggest country in Europe. It's the driver of the economy in Europe. And so the German election is not only important for Germany, but also for us in Austria and for Europe as a whole. So we are following the campaigns very closely.
Well, that was the Austrian Chancellor, Sebastian Kurz, telling us that the center-right would suffer if Merkel's CDU-led bloc fails to win in Sunday's vote in Germany. So, as we count you down to the election, we'll also hear from the parties currently sitting in the Bundestag in a televised debate. After 3 debates between the Chancellor tonight, the Chancellor candidates tonight, we also hear from the smaller parties that they may enter into coalition with. So, for more on all of this, on the state of play in Europe's largest economy, we're joined by a reporter on the ground, Maria Tadeo. So, Maria, how significant is this debate ahead of the Sunday election?
Well, Francine, normally you wouldn't really pay attention to a debate like this, as smaller parties usually poll around 10%, so they're not all that significant. And also keeping in mind that we've had already 3 debates with the 3 main chancellor candidates. By the way, Olaf Scholz has won every single debate until now. But the one today really does matter, because polls right now show that the next German government will have to be a 3-way coalition. So the focus will be on the smaller parties this time, in particular the Liberal Democrats of Christian Lindner and Die Linke. There's 2 things that I'll be particularly interested in hearing. One is, of course, the conditions that Christian Lindner will put on the table to back an SPD-led government. If you remember, in the previous election, he blew up the coalition talks when he did not get the finance ministry position. And the second one is Die Linke. You know, there's still this idea of a red-red-green coalition that is being floated around. The SPD has said that they find some of their policies, in particular on the foreign policy and NATO, problematic, and that would derail a possible red-red-green coalition. So those are the 2 things that we will be watching out in this debate tonight.
Thank you so much, Maria Tadeo, there on the ground for us. Now, we'll also be covering the election day, of course, live with analysis as polls close in Germany on Sunday. Don't miss that from 5 p.m. UK time. That's 6 p.m. in Berlin, and that starts on Sunday. Now, this morning, we've had some PMI readings from European nations, big misses across the board, supply delays, and higher prices are hurting manufacturers and services. Now, the figures underscore the conundrum faced by policymakers in the region as they balance keeping borrowing costs low to support the recovery. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. We'll talk Evergrande, we'll talk Fed, and Jay Powell. This is Bloomberg.
The electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose with this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have soon the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted.
You look at this meeting and, it's what the market has been waiting for. Everybody can exhale. We've been waiting for the meeting where they finally talk about tapering. This is it.
We do have some rough road ahead. That said, the Fed is, we're seeing a Fed that's getting more hawkish.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Thursday, September 23rd, our top stories today. Taper timing. The Fed signals it may begin cutting asset purchases in November, and a rate hike may not be far behind. A moment of truth for Evergrande, while the distressed developer faces a key coupon payment test on a dollar bond today. And the FDA authorizes a third vaccine dose for those at high risk. The CDC meets today to make its own recommendations. Kaylee, we finally have a green day. We're once again buying the dip, and actually traders less stressed about Evergrande as well. What are we seeing in the markets?
Yeah, we finally got some clarity on tapering from the Fed, Francine. And then, of course, we do have to monitor the Evergrande situation. All of that said, it was a broadly positive session in Asia. Granted, Japanese markets were closed for a holiday, so pay no mind to the red on the screen when it comes to Japan. But they opened back up in Hong Kong in a positive way. The Hang Seng Index rising 1.2%, Chinese stocks rising as well. You had the PBOC injecting another $17 billion in liquidity, short-term liquidity, into the system to continue to try to ease fears around Evergrande. And when it comes to Evergrande, of course, we know that they privately resolved the yuan bond payment that was due today. There's also a dollar bond payment that is due today, and that is still a question mark. You are seeing some relief in Evergrande shares. They were up as much as 32%, then that was sold a bit. They're only up 18% as of the close. But the dollar bond due in 2022 is actually just sub 30 basis points. Yes, that's still 30 cents on the dollar, I should say. It was at 24 cents on the dollar earlier this week. So that is actually a bit of an improvement. And you did see some tightening of Asia dollar bond spreads as well after 5 consecutive days of those widening out. I would also just point out the Japanese yen is your biggest underperformer in both Asia and G10. Not a lot of bid for that safe haven today. It's weaker against the dollar by about 0.2%. Now, as for the picture here in the U.S., of course, we did get that Fed decision yesterday. Looks like a taper announcement is coming in November. That was the indication from Chairman Jerome Powell, who also said the taper would be done by mid-2022. You also have that dot plot, some movement. They're now split on whether or not the first hike comes in 2022. We saw stocks rising after that decision. Those gains look like they will continue this morning, with futures up about 0.75% on the S&P 500. In the bond market, we did see a flatter curve off the back of that decision. We actually saw yields on the long end coming down. They're coming back up to today, though, up about 3 basis points on the 10-year yield to 133. And you are starting to see just a little bit more flattening when it comes to the 5/30 spread. 95 basis points is the flattest it's been since July of 2020, Matt.
All right, I'm looking at the dollar dropping there and just wondering how the market, Kaylee, is reading what we saw from Powell yesterday. Why the dollar weakness? Maybe it's just because it's more of a risk-on day. It has nothing to do with the Fed's hawkish or dovishness, but rather the market's desire to buy shares. We had a little bit of a weak by the dip, but it has slowly gathered pace, and now we're looking at more green on the screen. Again, in the core, you're seeing France and Germany do quite well as the periph country of Italy. You can see the boot there in bright green. Take a look at the Stock 600. All of the industry groups are rising right now. You have tech and auto parts leading the way, as well as consumer. So it's very bullish. You know, that's not the defensives that are leading at all. You can see the German bonds gaining a little bit in yield. So investors are comfortable enough to sell them off. The euro and the pound obviously gaining as the dollar falls right now, 117 and 136, but not any different in terms of the handle on the pound. And it's interesting because now we have the BOE to contend with post-Fed. Francine?
Yeah, it's amazing, actually. Tech stocks, car makers leading this broad-based advance to, you know, even if we have those chip shortages. Now, we'll have plenty more, of course, on the markets. This is what else we're watching today. There's quite a lot going on. It's been a very heavy week for central banks. Another big day today with rate decisions from the Bank of England, Turkey, and South Africa. We'll also get the latest U.S. initial jobless claims. That's at 8:30 a.m. New York time. Then the 6 German chancellor candidates debate for a final time before the September 26 election. Yes, we're 2 days away from that election on Sunday. And then CDC advisors finished a 2-day meeting today on COVID booster shots. This comes after an FDA panel recommended booster for older at-risk Americans. So it's almost taper time for the Fed, and rate hikes may not be all that far behind. Well, the chair, Jay Powell, spoke on the timing of that yesterday.
The committee continued to discuss the progress made toward our goals since the committee adopted its asset purchase guidance last December. Since then, the economy has made progress toward these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted.
Let's get more on this with our Danny Berger. Danny, I mean, they were trying actually to divorce, if I can use that word, the difference between tapering and hiking.
Yeah, they absolutely were, and perhaps the market believed it, or at least has accepted that narrative given the reaction. Now, I'll get to that in just a moment, but really what we thought the drama might center around was the dot plot, and to that degree, they did not really disappoint. As RBC's Tom Porcelli put it, they are building up a much more aggressive hiking cycle than we thought they had the stomach to handle. If you go out to 2024, these projections suggest that we'll get at least 8 rate hikes by that period. And they are evenly split in terms of people thinking we'll get a 2 handle on those rates. Now, given that Powell said we expect tapering to end by mid-2022, given this more hawkish stance in the dots, it's perhaps surprising we saw the market reaction, which, Matt, you were pointing out, a weaker dollar, stronger stocks, and at the same time, a yield curve, which steepened very aggressively, at one point getting its steepest since, or rather flattened its most flat since May of 2020. Now, the reasons for this, I've spoken to so many people, and every single person has a different reason. Now, on sort of the more optimistic side, you have what you were saying, Francine, that people believe the Fed, that just because they're about to taper doesn't mean they're going to be aggressive with hikes. On the other side, you have this fear that they're acting too aggressively and might result in a cut down the road.
Obviously, Danny, it would be nice if the week just ended after the Fed decision, but we still have a lot of other central bank action on deck. Bank of England, what are you expecting?
Yeah, no rest, Kaylee, especially after you had that great coverage of the Fed decision. You get no rest. We have this decision from the BOE coming at noon. We are expecting them not to change, to hold rates, but it's a really delicate balance that they're going to have to strike. This isn't the Fed. They have issues like Brexit, which means more supply shortages, higher inflation that really overshot their target. So they might say, look, the economy is stagnating, so we're not in any rush to raise rates. The market, however, pricing in a rate rise by May of next year. So in this announcement, in the press conference, they might have to really talk down the markets and say, because of what the economy is doing, you need to push out your expectations for a rate rise. Really at stake here is sort of the believability, their ability to communicate and keep prices in line.
Danny, thank you so much. Danny Berger there, putting all the central bank action into perspective. Now, it's a key test for Evergrande today. That's as the distressed Chinese developer faces a dollar bond interest payment deadline. Kaylee, I had a great chat with Tom McKenzie. I know he's coming on shortly, but he was reminding me, first of all, they also make watered bottles, which I forgot about, and then they have a car unit for electric vehicles that was valued as much as Ford last year.
Interesting. I mean, the point of the story, Francine, is that this is a giant. And when we talk about this company's liabilities, we're talking $300 billion worth of liabilities. So it's not even just about the bond coupon payments that are due this week. Yes, we know the private resolution has come for the yuan-denominated bond, but the dollar bond is still a question. And it's not even just about today and the deadlines today. It is about the millions more in payments that this company is going to have to make over the next year, Francine.
Yeah, and that's $1 million question, $1 trillion question, because we don't know exactly the second or third round effects. The man that understands Evergrande inside out is Tom McKenzie. Well, you understand it more than most.
I don't know if anyone understands this company inside out.
But it goes back to the problem of actually we don't know. If it defaults, we don't know how far it reaches.
That's absolutely right. So the consensus that we've been discussing over the last few days is that you will get some kind of controlled restructuring, that this cocktail of policies that China's officials have used before, and they've tested it, tried and tested with their playbook around HNA and Umbang and Baoshan Bank, they'll put that to play. But as Francine is saying, it's the financial engineering linked to Evergrande with its wealth management products and beyond. When you lift the hood on that, what are officials going to find? The other key question, of course, is the question of contagion, the channel of contagion. We were hearing from Trivium in Beijing yesterday. They were saying, look, don't look at the credit markets. Look at what's happening with Chinese house buyers on the ground. Is their sentiment changing?
Tom, I just want to bring our audience and our listeners some breaking news. We just got a red headline crossing the terminal. China is telling Evergrande to avoid near-term dollar bond default. We have been waiting for more actions from China. And of course, this is the dollar bond that we know is due today. Technically, there is a 30-day grace period, so it wouldn't default automatically. But Tom, just let me know what you make of this statement from China and how you think Xi Jinping and the Communist Party is going to move forward from here.
This is interesting because a number of watchers of this story had suggested there is a hierarchy, and near the bottom of the list are those dollar bond holders. Now you have a statement from China, we'll have to find out exactly which ministry this is coming from, saying that Evergrande should avoid defaulting on its dollar bond. And as you say, we have a 30-day window. We may not get a resolution or clarity on this today. We'll have 30 days potentially for this to come into focus. But I think that is important, and it may lead to questions as to whether or not that breakout of the hierarchy is as it seems. Again, we'd had the view that you're going to get the employees, you're going to get the owners of wealth management products, and of course, those owners of 1.5 million Evergrande properties around the country who still want to get, of course, their property or their money back. They will be protected. At the bottom of the list, the view was, near the bottom of the list, would be those dollar bond holders. This maybe changes the view on that.
Yeah, I mean, it's really interesting, Tom. So this story just breaking on the Bloomberg terminal, and it's basically saying, so this is financial regulators issuing a number of things to Evergrande, but at the same time, not offering financial support to Evergrande, because it's quite quirky that China, who can actually shore it up, is saying, Evergrande, look, for the moment, you could be on your own. I don't know. We'll find out a lot more, of course, throughout the day.
Or we're about to take you over, right? I mean, they're saying, like, pay your debts, but if they don't have the money, they won't be able to. And, you know, some news sources like AsiaMarkets.com are reporting that the CCP is about to take control of Evergrande. So I wonder, Tom, what you think of that possible nationalization of this company.
Well, it's a playbook they've resorted to before around, again, Baoshan, HNA, Umbang, all of these risks around conglomerates that have bubbled to the surface, and they've had to put this playbook to work. So they can dust that off again, and they can get the state actors involved. They can shore up the banks that have exposure to this company. That is the strength, of course, of the political economic system that China has. But again, I would say watch the channel, the contagion channel, when it comes to the sentiment of Chinese house buyers. Again, the property sector accounting for 20 to 25% of China's GDP.
And Tom, again, policymakers trying to learn more about who holds Evergrande's debt. That doesn't fill me with confidence. It's from our story. And also, it's unclear whether these officials believe that the company should eventually impose losses on offshore credits. Our Tom McKenzie all over this story, and of course, he'll bring us up to date with anything to do with Evergrande. You can also watch our special coverage, The Evergrande Effect, tonight, 9:30 p.m. in New York, Friday morning at the China Open for our viewers in Asia.
All right, let's get over to Washington right now. 5 months after President Biden unveiled his social spending vision, the administration is struggling to unite congressional Democrats behind a bill that can pass in the face of united Republican.
All right.
At this
I think we've lost actually our Matt Miller. I don't know whether it's a 2020. I think you're back. I don't know whether there's a mute button, but we'll work on that, and we'll get straight to Jack Fitzpatrick, Bloomberg government reporter, who joins us now from Washington. Jack, what's on your radar today?
We're hearing the progressives and moderates debate with each other this week, heading toward a Monday vote on the infrastructure package that passed the Senate with bipartisan support. The moderates believe, or at least recently believed, they could pass that despite progressives opposing it, because progressives are holding out for this larger $3.5 trillion tax and spend bill, or whatever that the top line will end up being. The Republicans, though, in the House are whipping against this bill as leverage, so it's looking a little less likely that they can actually pass that. There were 3 meetings among Democrats with the president yesterday. None of them really seem to be a breakthrough. This is something that seems to be appreciated by Democratic lawmakers, but it doesn't change the difficult calculus on counting the votes, or the difficult timing between these 2 different bills that really are on different tracks. So they're preparing for a critical Monday vote that is going to tell everybody who really has the leverage between the moderates and progressives.
All right, well, we'll know you'll be keeping track of all of it. Jack Fitzpatrick of Bloomberg Government, thank you so much. Let's get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S. And I wanted to begin with a newly public company, Freshworks. It's a software company, made its public debut yesterday.
Hello, traders. Again, we need to move our stop for euro even further. And so please move your stop to 117.22.2. Okay. It will give us 10 pips in profit, and it will give you profit as well. If you copy this trade, if you use our strategy, you know how we trade. If you don't, you can get the strategy from company.co.uk. I'll speak to you later.
Is probing it, a criminal probe related to insurance payments for federal health plans. Number of analyst downgrades off the back of that. The company also suspended its forecast, and the stock is plunging in pre-market trading, down 56% before the bell, Francine.
Yeah, interesting. It's actually unrelated, but I spoke to someone a company actually that was valued at $10 billion that also makes ear pieces and hearing aids here in Europe yesterday. Coming up this hour, Paul Donovan, UBS Global Chief Economist, and later on the FDA's booster recommendations. We speak to Joshua Sharfstein of Johns Hopkins. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper, and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lyons in New York. Now, I want to welcome our listeners on London DAB Digital Radio and tell you, I'm going to pull up a chart right now. You can't obviously see it, but imagine Michaela Maroney's face after she was denied a gold medal at the Olympics. The chart is entitled Not Impressed, and the reason is energy stocks have really done poorly in relation to the S&P 500. I'm showing the S&P 500 sort of taking off from the bottom of 2020. My producer, Dan Curtis, brought this chart all the way back to 2011. I don't know if that was necessary, but the important part is the last couple of years here, the energy producers have massively underperformed the index. And in fact, they've even underperformed energy itself. If you look at oil, the recovery since oil went negative has been about $110 in gains, and still energy companies, you would have lost money if you bought them when oil turned negative. I want to bring in Jonathan Stubbs from Berenberg, where he is an equity strategist, and talk to him about this because, Jonathan, you've highlighted energy underperformance in a recent note, and I wonder how long you think it's going to take for these producers to catch up with the benchmark and the underlying commodity.
Yeah, we put a note out recently. We think the sector's pretty interesting. You know, it's not the only sector that we have a focus on right now, obviously, but yeah, historically, energy does well when the global economy is growing and when demand is strong, and clearly that's what that's the period we've entered into now. We think our base case that extends into next year. It's what we call synchronized global growth. That typically supports commodity prices, including oil prices, also bond yields, and obviously with central banks sort of moving towards tapering, with inflation pressures, bond yields should be heading higher into next year, and typically energy outperforms, as it did very strongly, especially in the US at the start of this year. Energy outperforms and bond yields are rising, and the sector's flat on its back. So there's not much love there. There's an ESG headwind. We think it's an interesting time to be looking at the sector.
So what exactly are you looking at, Jonathan? I mean, one of the things that, you know, is quite quirky, which maybe a lot of people don't think about, is that it's actually the old school commodity producers that also make some of these rare, you know, components that we need for the transition to green. So is that where the attractiveness is?
I think, I mean, there's a lot of value across the whole sector. There are various companies, you know, pushing transitions into renewables, etc. You know, the old schools of majors just look very, very cheap. I mean, in Europe, the biggest sort of market cap oil companies, the sort of the well-known names, you know, they trade on sort of single-digit PEs. Their cash flow and balance sheets were very distressed last year, but that's recovered, you know, very strongly. So, you know, the biggest European majors now have, you know, net debt EBITDA less than 1 time, so balance sheet very strong. And the free cash flow yields for these companies, the biggest 5 on average, is back to sort of 15%. So they're paying dividends again. They're growing dividends. They've got cash, which gives them optionality. They've got balance sheets, which gives them optionality. And that optionality can fuel shareholder returns, or it can fuel investments into some sort of transition strategy, which some of them are pursuing. So I think underlying, there's a lot of value here. Most investors don't want to go near a lot of these names for ESG reasons, but I think there might be other buyers out there who find the value in these companies.
Jonathan, I want to come back to breaking news we got earlier this hour out of China. China apparently has told Evergrande not to default on, in the near term, on its dollar bonds, but not really providing direct assistance to this property developer either. How do you think about the bleed-through potential into European equities?
Yeah, I think it's an interesting period right now, and a challenging one for investors. We've had this sort of recovery narrative playing out in markets for the last, you know, almost a year now, and I think most investors, I mean, certainly our base case is that recovery extends into next year. But there are a lot of risks on the table, you know, right now for the next couple of months, and you know, China's a big part of that. You've got Evergrande, you've got weaker macro data. And you've also got a credit cycle in China, which has, you know, been turning down for the last few months. So it's all joined up as China risk there. Before you start, you know, talking and discussing sort of geopolitical developments as well, which are another layer of risk. You then have, you know, uncertainty in the northern hemisphere about the winter and sort of respiratory viruses. You have friction between politics and people.
Well,
so
you've got the gas issues.
Bucket.
Jonathan, what do you think? Bring it back to energy. What do you think about the natural gas price climbs that we've seen and the shortages that we're seeing in, for example, the UK and Western Europe?
Well, again, I mean, it's symptomatic of a number of things. Political developments. Brexit is part of this. Supply disruption and the relationship between Russia and mainland Europe. And clearly, the demand environment, there's this shift back to synchronized global growth, as I call it, and demand is feeding very aggressive price shifts in many parts of the commodity complex and elsewhere. And we've seen that over the last year or so. So whether it's uranium or whether it's gas prices. Clearly, that then puts pressure on different parts of the chain. You're seeing a couple of companies, in distress, energy companies in distress in the UK. You're seeing governments having to get involved, and you're seeing prices come to consumers some of whom are not in a strong position to deal with that. So
Jonathan,
it raises a spectrum of inflation as well, which again is one of these big risks that market participants have to digest and process.
Thank you so much, Jonathan Stubbs there, equity strategist at Berenberg. Now let's get straight to the Bloomberg First Word News. And more than 1.5 million households in Britain are being forced to switch energy suppliers after 2 more retailers collapsed as prices soar. Well, that brings the tally of firms going out of business to 7 since early August. The UK Business Secretary said earlier this week that more companies would be in trouble as capped retail prices fail to cover costs. Now, the U.S. Food and Drug Administration has authorized a 3rd booster dose of the Pfizer-BioNTech vaccine for at-risk groups. Now, that includes people over the age of 65 and those at high risk of severe illness. It allows a single dose at least 6 months after the original shots. The total hit to revenue this year for the world's car makers is now estimated at $210 billion. Now, that's the latest dire forecast from Alex Partners, which says the industry will build 7.7 million fewer vehicles in 2021. Due to the chip crisis, despite efforts to shore up the supply chain, semiconductor availability has worsened as automakers exhaust stockpiles and other industries have no more to spare. I mean, some of the craziness around this is also secondhand cars. Matt Miller, their price has gone up some 30% because of it.
Yeah, absolutely. And it doesn't seem like it's coming down anytime soon. I checked the prices on I would say daily, but really, truly, it's an hourly basis, and they continue to remain incredibly strong. I start to wonder if internal combustion engines are just going to appreciate from now on because people are worried they're not going to be able to buy one in the future.
Yeah, we'll talk a lot more about cars on this program. Also coming up, we talk Fed and Evergrande with Paul Donovan. He's UBS Global Chief Economist. This is Bloomberg.
Boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. it's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? You should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kaylee Lyons in New York. Matt, it's very clearly a green day. Evergrande, let's not worry about. The Fed, all good. We're buying the dip.
Yeah, absolutely. I mean, we didn't buy the dip with such vigor on Tuesday. It only started to ramp up, I thought, a little bit yesterday, and now it looks like the markets have decided they're totally cool, the water is clear, you can go back in again. But the interesting thing is we haven't really had that kind of scare in quite a long time, since really the beginning of the pandemic. So it wasn't a buy the dip the way we've seen it thus far. I think JP Morgan has written some research on the fact that the outflows from ETFs were absolutely huge. And so maybe that marks a turning point in the way this rally has run.
Yeah, maybe. Kaylee, is it playing out in the markets?
Yeah, well, it's interesting. To Matt's point, we actually didn't see strong dip buying at all in the U.S. until yesterday. The S&P snapping a 4-day losing streak. It has been a bit stronger in Europe, and that does indeed continue again today. The Stock 600 higher by more than 1 percentage point now. Every single sector within it is in the green, including technology, which is leading the way. Here in the U.S., we did see gains off of that Fed decision yesterday. Yes, a taper announcement likely coming in November. They expect it to be over in mid-22. And we saw some movements in the dots, but the market really took it in stride. Right now, S&P 500 futures up another 0.8%. In the bond market, the end result of the Fed decision yesterday was a flatter curve. Today, though, we are seeing selling in the bond market, yields moving up on the 10-year by about 4 basis points. We're sitting at 134. And then I would just point to oil as well, a little bit of weakness, down 0.2%, trading at $72.11 a barrel. As for some stocks moving in pre-market trading, we have a number moving on analyst recommendations. First up, Joby Aviation was initiated an overweight at Morgan Stanley. It's up 5.4% now. SoFi and Plug Power also each getting positive analyst action. To the downside, though, is Trimble. It's down about 2.2%. It's a GPS software company cut to underweight at Morgan Stanley. The analyst putting a $74 price target on the stock, and it's trading at $88 this morning, Matt. So some downside is seen.
All right, so and some pretty techie names there to watch. Now, as we count down to the Sunday election here in Germany, we'll hear from the main parties in a televised debate tonight. The smaller parties that they may enter into coalition with will also take part. For more on the state of play in Europe's largest economy, we're joined by Maria Tadeo, who's in Berlin on the ground. Maria, how significant is this debate ahead of the Sunday elections?
Well, Matt, you know that normally you would not pay attention to a debate like this. You focus on the big ones, and we've had 3 of those already. And by the way, Olaf Scholz has won every single one of them. But today really does matter because this is about the future of coalitions. And if you look at polls, we know that the next government in Germany is very likely going to be a 3-way coalition. So we're going to hear for the smaller parties, and they may have a big say nonetheless in the next coalition. Now, there's 2 things that I would be interested in tonight's debate. One is a hearing from Christian Lindner from the Liberal Democrats. Remember, this is a traffic lights coalition. The market seems to like this coalition too. I'd be interested in terms of the conditions that he will put on the table to join in this government. Remember, in the previous election, he blew up the coalition talks when he did not get the economy ministry. And then the other one is Die Linke. This is the further to the left party. This has been floated as the red-red-green coalition. This is the outcome that markets would find the least favorable. The SPD has said that they have problems with their foreign policy, especially when it comes to their positions on NATO. So it'll be interesting to see whether or not they soften those positions going into this.
Thank you so much, Maria Tadeo, there on the ground for us. And this Sunday, we'll bring you live coverage and analysis of Germany's election. Don't miss that, starting at 5 p.m. London time. That's 12 p.m. in New York. Now, more on the markets, on the economy, the world economy, as the Fed and Chair Jay Powell take a more hawkish stance. We'll have plenty more, of course, on the Fed. He's with us in person in the studio. Paul Donovan, Global Chief Economist at UBS. There you go, Paul. I lost my voice because I couldn't believe you're here. I was all in the hustle for a second. When you look at what we heard from Jay Powell and what we heard actually from the Fed, I mean, they're hawkish, but the market are pretty relaxed because they believe that, sure, first they taper.
Yeah.
And then an interest rate, hike, we'll maybe think about it.
Yeah, exactly. And I think this is the difference from the taper tantrum back in 2013. The Fed has clearly distinguished between the quantitative policy, which is all about the growth part of the economy, and the monetary policy, the interest rates, which is more about inflation. And the Fed, again, last night, reiterating the current inflation is transitory, it's going to be fading. So the rate hike thing is pushed a little bit further out. And I think that the sort of the turbocharged taper, a little bit of a surprise. It's coming in a relatively short period that they're planning for this, but the markets are okay with that at the end of the day.
But the markets are okay because they don't think that, do they believe the Fed, or they think actually it's just, they're more short-termists?
I think it's because there is actually a reasonable amount of belief in what the Fed is doing. And it's fairly obvious the US economy doesn't need large amounts of liquidity anymore. We needed it last year because everyone was hoarding cash. Everyone was putting cash under the mattress. But now they're going out and they're spending that money in the shopping malls or the virtual shopping malls these days. The money's being put to work in the economy, so you don't have that need for liquidity. And this has been very, very obvious throughout this year. So I think there's actually almost a sense of relief that the Fed is getting on with it and going back to normal, going back to a very slowly growing balance sheet.
Does it matter that the balance sheet is still growing, Paul? I mean, does it matter that the Fed has this massive $8 trillion balance sheet at all?
I don't think it does in the right context. And now the first point is central bank balance sheets always grow. The economy grows, the balance sheet is supposed to grow by roughly the same amount. You're supposed to keep a stable balance sheet to GDP ratio over time. So that of itself isn't a problem. Now, the size of the balance sheet, the very large amount of liquidity that's being pumped in, I think that's reflecting the fact that the US economy and the global economy has become a bit more cash-orientated. So, for example, the Bank of Japan has always had this massive balance sheet because Japan's a very, very cash-based society. And the US, of course, who used to use a credit card to buy a newspaper, well, now we're going to perhaps a slightly more cash-focused US, so that does require a larger absolute size of the balance sheet.
Paul, I was listening to the chairman's press conference yesterday, and he continually referenced supply chain issues that to this point have proved a lot more persistent. Do you think the Fed is still underestimating the persistence of inflation?
No, I don't. And we're starting to see very strong disinflation forces. Matt will be delighted to learn that used car prices are already decelerating rapidly, and they're going to turn to deflation. We're going to get absolute negative price changes coming through before too long. We saw demand weakening in the airline industry, and what happens? As soon as you get demand starting to weaken, there's a mini price war going on. There's really aggressive price competition. So I think we're seeing evidence of this transitory nature. I would argue that to blame it all on supply chains is a bit disingenuous. Because, of course, what we've had is extraordinary demand, which has overwhelmed supply. And that's slightly different because the extraordinary demand we know doesn't last forever.
Well, let's also talk about another supply issue then, Paul, as it relates to the labor market. The chairman went to great lengths yesterday to distinguish the criteria for tapering versus liftoff, and he continually said we're not going to hike rates until we've reached maximum employment. Does the Fed need to redefine what maximum employment is?
Well, I think economists do. I'm not sure the Fed chair is necessarily the best person to define maximum employment.
Fair enough.
Economists should be defining maximum employment. And give us a couple of years and we'll tell you what it is now. Because this, of course, is the problem. We are in the midst of enormous structural upheaval. It's not just the pandemic. The pandemic has been a really sort of superpowered cyclical event, but we have accelerated structural change, the fourth industrial revolution. You know, there are things like shifts to working from home, which change things. You know, the more time I spend working from home, the less likely it is that my local sandwich shop near my office is going to be employing people because you know, my consumption of overpriced sandwiches in the City of London goes down, so you change employment patterns, and we need to deal with all of this. So understanding what the new natural rate of unemployment is going to take some time. We can approximate it, we can't be certain.
How much is growing inequality, you know, still at the forefront of our issues? Because we wrote a story a couple of days ago about how housing prices are just exacerbating inequity, and I think Kaylee shared a story with us on this morning's call about Hong Kong building apartments that are the size of 2 king-size beds. I mean, when you say working from home, only the privileged are able to buy a home these days.
Well, frankly, it's only the middle-aged. And I'm not sure that I count as privileged just because of my age, but absolutely, it's the older generation that have the access to this. Now, you know, if you've got a vibrant rental market, that can be an offsetting factor, and you can see that coming through. But we do see these intergenerational issues, and that is a clear concern. And we, I think, are going to be facing up to the issue of not just inequality, but relative shifts in income and status as we go through structural change. Because whenever we get something like the fourth industrial revolution, whenever we get this structural upheaval, people's relative social position starts to change, and that becomes a very, very serious issue in the wider economy because people resent it. You know, everybody resents it if they see their income falling. What they really resent is when their income is going down and their next door neighbor's income is going up.
Social media.
Yeah.
Paul, talk to me a little bit about Evergrande. What happens if it defaults? Is there a second term and third round effects that we're not looking at?
I am inclined to think not. So Evergrande has quite wide exposure in the Chinese financial system. It's got a lot of counterparts, but because of that, it's relatively shallow exposure. We don't have this, you know, enormous, you know, right, this institution is now in serious problem because, you know, they've got 50% of Evergrande debt. That's not what's happening here. So I think that this is a largely local problem to China, and is something which I think the authorities can and will contain. What I think this situation has done, along with several other measures recently, is remind us that there is perhaps a risk premium about regulation, about procedure, about rule of law in a country like China, where, you know, the way that these things are negotiated and the way that these sort of situations play out is perhaps not quite as transparent as other markets, and investors are requiring a risk premium as a result.
Paul, thank you so much. Paul Donovan, their global chief economist at UBS. Now, coming up next on the FDA's booster approval, Dr. Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. He's coming up shortly, and this is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出。名額咧係深圳灣口岸同埋港珠澳大橋香港口岸，每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening. This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
The FDA has authorized a third booster dose of the Pfizer-BioNTech vaccine for at-risk groups. That includes people over the age of 65 and those at high risk of severe illness. And it allows a single dose at least 6 months after the original shot. So here's my thing, Matt. I am not eligible for one because I am not over the age of 65 and I don't have any, thankfully, autoimmune issues. And it's also a bit confusing as to whether someone who received a Moderna shot or a J&J shot is then able to get a Pfizer booster if they do meet those relatively narrow criteria.
Yeah, I don't know. You'd have to ask a doctor. But I'm thinking we might have one on the line.
I think we do. Let's ask a doctor. Dr. Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean, joins us now. So, Doctor, I don't know if you just heard me, but let's just start with how relatively narrow this scope is of who the FDA says could get a shot. Do you think it's too narrow?
I think that the decision makes sense. I mean, the FDA looked at the data, the CDC presented to the FDA, and you had a really good discussion at the advisory committee. It'll be people who receive the Pfizer vaccine who fall into these different categories based on the fact that there looks to be some reduction in protection over time from the Pfizer vaccine. I think we'll see recommendations for the other vaccines pretty soon. You know, big picture, I think these boosters will be somewhat helpful, but not a game changer for the people who receive them. We're talking about a modest decline in effectiveness and a little probably temporary bump up from the booster. The really important thing, though, is to get people who are totally unvaccinated vaccinated. That's just a huge jump in protection.
How do you do that, Josh? How do you incentivize people? I mean, there's been a number of, people, big companies saying you can't come to work if you're not vaccinated. I think you could also enter in the free, in some states, the lottery. Is there anything else that the U.S. and especially states can do?
Well, I think it's really important to be very persistent with outreach efforts. That's important. I think the mandates work in getting more people vaccinated, particularly people who need this for their job. I go out vaccinating, and most of the people coming in are saying, look, I got to get it for my job, and it's probably a good thing anyway. I've been just putting it off. So I think that is that's another way to do it. I'm a little worried that if if the entire focus goes to boosters, that will lose energy in that effort to keep getting people vaccinated. So it's just going to be really important to balance out the need to follow up with boosters, give people the ability to get boosters, but press forward for those first shots. That is really going to be the thing that helps the hospitals and just reduces the pressure of the pandemic.
Hey, Doc, my barista told me she learned on TikTok that some people couldn't walk after getting the vaccine. Are there any known side effects that aren't like 1 in a million that you're seeing from the vaccinated?
You know, there is so much misinformation about the vaccine, and that is also another thing that we need to do, is to really counter that. I mean, I think someone said that it was going to be spread by salad dressing without, I mean, not kidding. I mean, it is just crazy what is out there. In terms of side effects, well, there are temporary side effects that a lot of people, have, which are like a day of fatigue or headache, or a fever. But the most common is, for younger people, is the temporary inflammation around the heart, which is basically also very rare and resolves. So, it's not like anything. There's nothing that has no side effects, but compared to other vaccines, compared to medical treatments, and certainly compared to COVID, which not only has the risk of horrible illness, but this long COVID syndrome, the vaccination is incredibly safe.
Thank you so much, Dr. Joshua Sharfstein of Johns Hopkins. The Johns Hopkins Bloomberg School of Public Health is, of course, supported by Michael Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. Wait, Mamil, you have a barista? What are you, like a millennial?
I have a coffee shop under my house. Literally below my apartment is a coffee shop. So I've started to go there like every morning as I become more and more addicted to coffee.
I know, it's been like 2 weeks you've had coffee. Barista, please don't look at TikTok. Look at Illy Cafe to make better cappuccinos for our Matt Miller. Later today, we discuss travel post-COVID with Expedia Chief Executive Peter Kern. That's at 5 p.m. in New York, 10 p.m. in London. And this is Bloomberg.
Traders, position closed, as you can see, on Europe. Let's move on. We made 10 pips, we made 1,000 pounds. Okay, stay with me. We will look for other trading opportunities. If you're using our strategy, you can check for other pairs or securities indices that will give you profit. In the meantime, if you want to follow our trades that shows you on the streamer, on the screen, wait, stay with me, and wait for other instruction. Stay safe.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Surveillance, and I know, Tom, you'll be looking at exactly what we heard from Jay Powell and what it means for treasuries going forward.
This news conference was underplayed. It was going to be a snooze fest. It wasn't, Francine. John Farrow and I are really focused on how coordinated it seemed the press was in some delicate questions yesterday. Away from that was the Fed speak, and that was best personified by curve flattening. The vanilla curve is 2 years to 10 years. If you go out further, the standard curve is a difference in yield between the 30-year and the 5-year. Down it comes a number of months ago, some stasis, and this is an incredibly elegant trend toward a flattening beginning in 2026 and on out.
Tom, we were speaking with Paul Donovan earlier, and he calls this the turbo taper. He said the pace of the taper is what was so surprising to him. Do you agree?
I totally agree on the x-axis. It's all about the x-axis. And Ira Jersey agrees with Paul Donovan. And what Ira found so fascinating off of fixed income at Bloomberg Intelligence is the mystery out to 2014. I mean, there's some certitude here about where we are now out to 2022. But there's a massive split between the market, Kaylee, and the Fed on what happens 2 years out.
Even Jay Powell urged Congress not to delay raising the debt ceiling. Is this debate going to be more damaging than previous debt ceiling debates have been?
Don't know. It's a really good question, man. I am an amateur at this in that I've grown up with debt ceiling debates. They always end. Everybody kisses and makes up. Is this the time they don't? And that's the debate that we see.
Tom Keene, I'm looking forward to your program.
Sure.
Tom Keene, their co-anchor of Bloomberg Surveillance, which starts shortly. In the meantime, this is what else we're watching. And Kaylee, you're looking at earnings.
Yeah, Nike earnings coming up after the bell. Really what I'm focused on is the forecast and to what extent factory closures in Vietnam are going to impact the company's results, because Nike sources about 40% of its products from Vietnam. So those supply chain issues could hit them quite hard. It will be very interesting, Matt, to hear the commentary from executives surrounding that.
All right, I'm going to be watching used car prices. We've been talking about this, Francine, with Paul Donovan as well, and he says the gains are decelerating. I'm in the market for like a 1987, 1988 911, the one with, you know, the Getrag 5-speed manual transmission that everybody wants. Yeah?
The problem is that, you know, decelerating could be from 30% rise to like 26%. That's still a lot.
Good point. It's like the taper. It's still going to build the balance sheet. They're just going to build it at a slower pace.
And Matt Miller only accelerates.
Only, and ready to spend the big bucks for the old, beautiful cars. I'm looking at the Bank of England rate decision, so it comes out in about 1 hour and 5 minutes. The focus, of course, is on inflation. There's a number of economists that are expecting them, of course, also to, you know, focus on the risks to the economic recovery. Markets currently pricing in the first rate hike by May next year. More Bloomberg surveillance is coming up ahead. We'll also be hearing from the Norges central bank governor, amongst others. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Who are U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests?
Daniel Ricciardo, Michael Jordan, and then Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah.
Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
Typically, the Fed hiking cycle does end up killing the value trade as well.
As long as the public consistently believes in the market and consistently puts money into it, I think it will continue to move higher.
Everybody's wondering why, U.S. equities are hanging in there. It's really about the interest rates.
The Fed is usually comfortable hiking rates only if the economy is doing well.
Next, 4 weeks can be choppy, but I think 100 days from now, I think we're in a better position.
This is Bloomberg Surveillance with Tom Keane, Jonathan Farrow, and Lisa Abramowitz.
A baby step towards tapering from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market with a bid up 0.75% on the S&P, adding to yesterday's gains, up 32, Tom, on the S&P 500. Is it a baby step or a major step towards the next move at the Federal Reserve?
It was a major press conference, John. I was really surprised. It wasn't a snooze fest. He really moved it forward, and you see it in the market reaction this morning. The first thing I went to, John, as I know you did, is the spread market, and it describes the Fed division between clarity short-term and a complete mystery out to 2024.
That's the big question, Tom. That's the big question. Yesterday, the flattener through the bond yield curve. This morning, steeper. But the big question is what happens after they've tapered all of this.
Exactly.
Middle of next year, okay, let's do it. Let's get it done. Then what?
Well,
raise interest rates?
I don't know. We're going to talk to experts on this. My lead question to David Blanchard and Michael McKee is just simple. How far is the market call from the dot call we saw yesterday?
Lisa, back in the building. Lisa, welcome back. Were you surprised by how much Chairman Powell just advanced the story in yesterday's news conference?
What I find interesting, Diane Swank actually nailed it. She said he is a hawk. He is among hawks. He is a dove, and that I think is the dissonance that you're seeing. That the dots don't reflect his rhetoric as he moves forward to yes tapering. That doesn't indicate a hike, whereas a lot of people clearly on the FOMC disagree.
Did you watch the Fed special yesterday?
I was going to say, what the hell is going on?
You watched the Fed special yesterday. That's what happened.
I wanted just to get,
Lisa,
we're killing ourselves putting in an 8-hour day, and you're at home watching us work.
TK, that's a compliment. Lisa took a day off, and she's still tuned in. Lisa, that means a lot.
I don't even have a TV at home.
Your price action this Thursday morning. Good morning. Shaping up as follows on the S&P 500. We advance. It's a lift. We advance 32 points. Positive 0.75%. Yields with a lift too. Going to spend a bit of time on this a little bit later. The bond market, really interesting. Flatter yesterday. The whole curve shifting higher today, up 4 basis points to 134.13. And the euro stronger, dollar weaker. Lisa, euro dollar 117.24, positive there, 1/3 of 1%.
Yeah, I got to say the thing that I'm watching today is definitely the krona, the Norwegian krona, simply because the Norwegian central bank became the first among the 10 most traded currencies in the world to raise interest rates today. Can you believe they actually lifted off zero? We're going to be speaking with Norges Bank Governor Øystein Olsen here on Bloomberg Television at 7:15 a.m. Here's my question. Are we seeing a successful and graceful exit to emergency policies by central banks? Are we seeing that effectively as we get some more hawkish rhetoric from some of the central banks? That is yet to be seen because of that yield curve flattening that we're seeing on the long end. However, this really does seem to be a sort of a tantrum-less process, at least so far. 8:30 a.m. U.S. initial jobless claims. The expectation is for 320,000. I'm curious about whether we can get there. And of course, people are also looking for job creation, which we will not see here, but because of the September 6th expiration of the enhanced unemployment benefits. And then today, this I think a lot of people are focused on. Evergrande has that $83.5 million interest payment on dollar-denominated bonds due in 2022. It is unclear whether they will make it. China policymakers, evidently, as reported by Bloomberg, have come out and said, please make it, because otherwise there is a concern that perhaps people will view this as an uninvestable sector. What does this mean in terms of policy support? However, they are not supporting at least paying for this bond payment, at least so far. If you want all of the background, the Evergrande effect, the special coverage that the Bloomberg is providing will be aired at 9:30 p.m. tonight.
Looking forward to that.
Me too.
Lisa, thank you. I prefer Matt Miller's name for special coverage, Tom. China decides. I think China still ultimately decides here, don't they?
I'd even narrow it down further. It's Beijing decides. We're starting to see whispers of that, John. I mean, I'm seeing, what I saw last night is about what I would think you're going to see. We are going to Friday. John, what do they do between Friday and Monday morning their time, Sunday evening our time?
Tom, from your perspective, is this a catalyst for something bigger or a symptom of something broader? Which one is it for you? Both?
It's a massive symptom of whatever. I've been in, 12, 15 years ago, we had experts, including BNP Paribas, with great work there on the disaster that was China real estate, the overline, the empty towers, the whole thing, John. You know, it's one part that, but it's also one part this domestic management that President Xi's trying to affect.
Let's get to Dara Mayer, HSBC Securities Head of Research Americas and Head of US FX Strategy. Long title, Dara. Great to have you back, sir. Let's start right here.
Big card. Got a big business card.
Did the new Fed sound a little bit like the old Fed in yesterday's news conference?
Yeah, it did. Look, I think you brought up a great point right at the top, which is we seem to have a bit of clarity now on tapering. November feels like the kickoff, and we'll finish the middle of next year. But beyond that, I mean, personally, I was really surprised that we didn't get more of a reaction from the market from that 2024 dot where it came out, coming in at 1.75%. The market seemed to say, yeah, maybe, but we don't quite believe you'll get there. They still don't quite believe the Fed will get there. And actually now, I think once we're going to get taper out of the way. We'll know what the deal is. We pretty much do already now. So the focus has to be on rates. And that's just simply, as Tom and you both said, that we just don't have clarity there. And it was kind of weird, I think, that lack of reaction to the dots, where I actually thought there should have been much more of a bid for the dollar on that.
But Dara, the concern here is that the dots might not matter, especially if it's non-voting members or people who could be removed and replaced by President Biden. So what do you say when people look at those dots and say they don't reflect the main core of the Fed?
Look, I think there's going to be a collective judgment across the Fed. There's going to be a range of opinions. You're right. At this point in time, the more hawkish dots likely reflect people who might rotate off the votes. But nonetheless, there's still a quorum of people on the Fed who view the economy differently to the doves. And look, even yesterday, Chair Powell, who might be amongst the more ardent doves, he says we're kind of all but done in meeting the taper requirements. So, if you got the doves saying we need to normalize, then I think by the time you get into 23 and into 24, then I don't think it's such an imagination stretch to say that what might be perceived as hawkish now, by that point in the calendar, that might actually be seen as a center ground within the debate.
So what do you see going forward of what could potentially cause more of a market reaction to the fact that the Fed is starting to exit from some of the most extreme accommodation of the post-pandemic era?
I don't think we're going to get much drama, if you like. I think this is a grinding, stronger dollar story. John talked about a baby step. I think that's how I would view it. It's a baby step to the exit. They're still moving. And other central banks, obviously chief amongst them, the ECB, are telling a very different story. Right. And so it means, that contrast, I think, works. People say, it should be in the price. But, no, it's still enough to get you grinding higher on the dollar or buying the dollar on every dip.
Dara, there are 7 dots out to 2024 in the vicinity of 1% or less. These are people that do not buy the vector described by the dot plot. What does the dollar do if we're in the vicinity of the 7 dots 2 years out?
Well, look, then that should limit the amount of upside that we get. But
So you're limiting this. I don't mean to interrupt here, but this is critical.
Yeah,
you're
no,
limiting the amount of upside versus the Steve Roach gloom of an ever weaker dollar.
Yeah, I think so, because look, it's a relative story, isn't it, Tom, at the end of the day? If pretend we get to a point like 2 years out where the Fed hasn't been able to do anything very much with rates, it's just kind of put in 50 or 75 or whatever, that most likely reflects a global environment where everyone else is in exactly the same boat. And somebody like the ECB, oh my goodness, what will they be doing if 2 years out the Fed hasn't been able to raise rates very much? So I know we can look at the dollar in isolation. What environment gets you to what you've just described? I think what strikes me as a very risk-off environment. You know, weak global growth. I don't know where you'd be at that you might get to that.
Let's call it.
So that would be my concern.
Let's call it, John Farrow, the Steve Major dots. I mean, I'm sorry, they're describing Steve Major's call.
Steve Major low for a long, long time. Darren, the data out of Europe this morning was really soft. Downside surprise on the PMIs. When you talk about this stronger dollar, I want to understand from your perspective where you push that through G10 right now. How would you play that?
Look, I do like it against the euro. I think that contrast is there in policy direction. As you say, PMIs this morning. Look, still supply side issues there, but still some weakening of demand. So I think that's a good angle. And look, to Tom's point about Steve Major's yield forecast, I think that sits neatly with our grinding dollar stronger view, because you don't need that differential to be widening for the dollar to be strong. You just need it to be there. And particularly in FX at the moment where volatility is low, you just come in every day, you get paid for doing nothing, for holding that dollar against the euro. And I don't think anything in the data we've had this morning on those PMIs suggests that the euro kind of personality is about to shift in any great way.
US PMIs due a little bit later this morning, 9:45 Eastern time. Euro dollar 117.22. Dara, thank you, sir. Dara Mayer there of HSB Securities. Really interesting news conference yesterday, Tom. Rewatched it when I got home yesterday.
Oh, you did?
First 30 minutes, yeah. I have to say, credit where it's due. Absolute credit where it's due to Gina Smilik of the New York Times and to Steve Leisman of CNBC to work off each other, Tom, to address a really sensitive topic with the Federal Reserve.
We're going to stop the show right now because this is wicked important, as they say up in Boston. John, it almost had a tinge of an ECB press
Couldn't agree more.
Couldn't agree more. Different.
It is so important, Tom, for the press to act as a pack together, especially on an issue like that, because let me tell you, for many people working the Fed, they worry about their access. Now, some people might say they were just doing their job. Well, not enough people do, Tom. So it was really nice to see two reporters just work off the back of each other on a sensitive topic about Fed officials investing in this market and investing in securities that the Federal Reserve themselves hold.
Yeah, well, it's really important. Gina's working on a new book on the Fed. She'll bring some authority there, and Leisman's a better guitar player than I am, so that's what you got to know.
I imagine that's true, Tom.
That's true.
Futures this morning up 31 on the S&P 500. We do advance up 0.7%. There is a lift in the equity market. There is a lift in Treasury yields as well, up 3 basis points to 133.45. That dollar, a little bit weaker today. This euro, a little bit stronger in the face of some pretty soft data. Euro dollar 117.23, the focus on the Fed yesterday, and the focus on China and the news still to come. Just what is Evergrande going to do with that interest payment due on that dollar bond? We'll talk about that through the hour. Danny Blanchflower weighing in on the labour market from Dartmouth College. Looking forward to hearing from Danny a little bit later this hour. From New York, this is Bloomberg.
First Word News, I'm Ritika Gupta. More than 1.5 million households in Britain are being forced to switch energy suppliers after 2 more retailers collapsed as prices soar. That brings the tally of firms going out of business to 7 since early August. The UK's Business Secretary said earlier this week that more companies would be in trouble as capped retail prices fail to cover costs. Japanese Prime Minister Yoshihide Suga is warning about China's growing military influence ahead of the first in-person meeting of the so-called Quad Group. Suga told Bloomberg the changing power balance in the Indo-Pacific could threaten Japanese prosperity. He'll join leaders from the US, Australia, and India tomorrow at the White House. Beijing says the Quad Group is engaged in Cold War mentality. The total hit to revenue this year for the world's car makers is estimated at $210 billion. That's the latest Dire forecast from Alex Partners, which says the industry will build 7.7 million fewer vehicles in 2021 due to the ongoing chip crisis. Semiconductor availability is worsened as car makers exhaust stockpiles and other industries have no more to spare. The U.S. Food and Drug Administration has authorized a third booster dose of the Pfizer vaccine for at-risk groups. That includes people over the age of 65 and those at high risk of severe illness. It allows a single dose at least 6 months after the original shot. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We need other high-income countries to deliver
on their own ambitious vaccine donations and pledges. That's why today we're launching the EU-US Vaccine Partnership to work more closely together and with our partners and expanding global vaccination.
The President of the United States there from New York City this morning. Good morning. Tom Keene, Lisa Bravitz, Jonathan Ferro. Your market looks like this, up 22 on the S&P 500, advancing 0.5%. But we pair the gains of this morning. Let's get to the intraday picture. We've got some work to do. Futures coming in just a little bit. We take a little bit of a dip, positive 24, but off session highs. Off the back of this story from the Wall Street Journal, it reads as follows. China making preparations for Evergrande's demise. Beijing reluctant to bail out the country's most heavily indebted property developer. It's asking local officials across the country to prepare for a possible storm. Tom, I'm just going to share the lead paragraph with our audience. Chinese authorities are asking local governments to prepare for the potential downfall of China Evergrande Group, according to officials familiar with the discussion, signaling a reluctance to bail out the debt-saddled property developer while bracing for any economic and social fallout from the company's travails. That's the quote, the lead paragraph coming from that Wall Street Journal story this morning. Two issues at play today, two interest payments due on two bonds. One local currency, $1 bond. We kind of dealt with the local currency issue yesterday. Today it's about the dollar bond, Tom, $83.5 million interest payment. Some indication from Chinese officials this morning, a little bit earlier this morning, that they wanted this company to avoid defaulting on that. There would be a 30-day grace period in the covenants of that particular bond. But this morning, Tom, that story coming from the Wall Street Journal suggesting that China has a degree of reluctance here to step in.
Yeah, there's no question about that, and that's why we see the market move. John, I would go, as you mentioned, the social tone of Kishai's work. In the bottom of the story, the last paragraph talks about to monitor so-called mass incidents. They're worried here about the traditional Chinese issue of people in protest.
I have to say, though, Tom, the market reaction, there's not much of one, is there? If you bring up the intraday chart again, it's just a little bit of a dip on the S&P. Off session highs, we're up 23 still.
Yeah, but we took the bloom off. I mean, you know.
A little bit short. But given where we were Monday morning, Tom, the things we were worrying about, Lisa, weigh in on this. Monday morning we woke up really worried about what was going to happen with these interest payments. Here we are sitting here staring down the barrel of an $83.5 million interest payment for this company.
Right.
And we still don't know what's going to happen.
And not only that, but you clearly have the concern about contagion that China seems to be gauging and preparing for, even based on this reporting. And to your point earlier, John, when you were talking about who owns the U.S. dollar-denominated bonds, there was a Bloomberg story this morning that indicated that even Chinese officials do not know who owns these bonds, and they are trying to figure out who they are going to be negotiating with. Just to give a sense of, we don't know the full picture right now at all, and neither do Chinese officials.
So that's the story from the Wall Street Journal. China making preparations for Evergrande's demise. The equity market just off session highs, Tom, up 0.5%.
John, I've got a minority position in Evergrande paper.
Do you?
Triple leverage.
Triple leverage.
You made one move out of cash, and that's the paper you bought.
It's a barbell strategy.
Why doesn't that surprise me?
We got it from Jack Fitzpatrick. Jack Fitzpatrick joins us here for too short a visit this morning as we talk China. Jack, you're the only one in the room who has to get to the Sunday talk shows. How do the leaders of this great nation get to the Sunday talk shows with a calendar put in front of them?
Well, the Sunday talk shows are probably going to be a little tense this time because heading toward Monday. Monday is really a very key day, and we're sort of building and negotiating toward that. Monday is the scheduled vote in the House on the Senate-passed infrastructure bill. There's been back and forth between moderates who say they think it'll pass and progressives who say they're going to withhold their votes and don't think it'll pass. Republicans now in the House are whipping against this, despite the fact that it got some Republican support in the Senate. Really, Monday, we're going to find out who's right in all of this and then find out how that affects the progress on the other $3.5 trillion reconciliation bill or whatever that top line ends up being. But so far this week and between now and Monday, there's this back and forth between moderate Democrats and progressives who both think they may have the leverage in this two-track strategy with these two major bills.
Jack, are we careening toward a debt default? I mean, we have 1 week left, and Punchbowl News came out today basically saying probably we have somewhat less than that. And frankly, all Congress members seem to be dragging their heels. What's your take?
we have more than a week until the actual effective deadline for the debt limit and the potential for a default. This is tied to a government funding measure, so we have 1 week until Thursday night of next week to try to avoid a shutdown. The bigger issue, though, is the debt limit in terms of the economic impact it could have. That deadline is probably around mid-October, if not a little bit later. It is not going well here in Washington. The Democrats are insisting this should be a bipartisan track. Republicans need to support it. Republicans have made clear the votes are not there in the Senate. The question then is, can they hold a vote that fails and then go back, change their reconciliation instructions in time to do it in a partisan way? That is a complex process that could be time-consuming.
Jack, this morning nobody cares. People are focused on China and they're focused on the Fed. And I'm wondering, just from the Fed perspective here, how President Biden read the press conference yesterday, read the notice that perhaps they're going to start tapering as soon as November. Does this give Jay Powell a greater chance at another term?
I don't think the reaction seemed to be that was a fundamental shift in any way. The mainstream Democratic position has remained pretty favorable to Jerome Powell, and nothing really has changed there. And to be honest, in terms of expectations for interest rates and the broader economic outlook, the way the debt limit fight is going and how poorly that's going has kind of dominated the conversation in Washington so far. So as far as that could go, that didn't entirely fly under the radar, but there wasn't a really significant change in terms of people's expectations, at least among the people in Congress that I've been talking to.
Hey, Jack, good to hear from you. As always, down in D.C., our Bloomberg government reporter. Got to keep everybody on top of a developing story. Let's call it that, TK. Your bond market yields are still higher. Your equity market is still bid. Equity futures up about 23, but we're off session highs. Why are we off session highs? Still up 0.5%. Off the back of this Wall Street Journal story, Tom. Just to repeat what I said a little bit earlier for people just tuning in. China making preparations for Evergrande's demise, the story says. Beijing, reluctant to bail out the country's most heavily indebted property developer, is asking local officials across the country to prepare for a, quote, possible storm. That quote comes from the Wall Street Journal this morning on a day when we have an $83.5 million interest payment due on a dollar bond. Tom, of Evergrande.
I still think it's social, John. I think the financial focus is great. It's Bloomberg's focus, no question. But within Keyside's article, it's a social mandate. The Bloomberg article that was out an hour ago alluded to that as well. Why are we up? I think it's off the Fed meeting, John. And, you know, it's fascinating to hear what the bull case is after what we heard yesterday, dovetailed into whether Evergrande is a discrete one-off event or something larger.
You say it's social, Tom, but that's the reason the growth model in China